Saturday, July 19th. And thanks for supporting this in prayer. Well, next time, Pastor Greg offers some important insight on defeating the giants of our lives. Join us here on A New Beginning with pastor and Bible teacher Ray Laurie.
Your source for the best.
Levi Strauss, earnings and revenue both above expectations, also raising full-year guidance. The company says it's working to absorb some of the costs from higher tariffs. That could change as trade policy evolves. The company's CFO telling CNBC that as policy currently stands, it anticipates an impact of 2 to 3 cents on earnings per share. Levi CEO Joe Goss said the company has been pulling back on promotions. It has been selling more apparel at full price.
Florida's Attorney General is probing Robinhood's cryptocurrency operations. In a press release, the Attorney General accused Robinhood of falsely promoting its trading platform as the least expensive way to purchase crypto. The AG's office has subpoenaed Robinhood, demanding market materials and other internal documents related to its crypto services and pricing structure. In a statement, Robinhood's general counsel said its pricing disclosures are best in class, and customers can trade crypto on the platform at the lowest cost on average.
Nike CEO Elliott Hill shaking up the executive team at its Converse unit. He's replacing Converse CEO Jared Carver with Aaron Kane, a 21-year Nike veteran who currently serves as vice president and general manager of Nike's global business. Converse revenue has fallen in each of the last 8 quarters. Sales fell 26% in the most recent quarter.
Coming up, 5 things to know before the opening bell, including the rising odds of a summit between President Trump and China's President Xi. The details next as we head to break. A look at yesterday's S&P 500 winners and losers.
Can I invite you to lean in and consider Jesus' claims about himself? Come see him afresh in our study through John's Gospel, Loved by Jesus. Come listen to Moody Church Hour here on Bot Radio Network this Sunday at 2 p.m. Central Time. Bot Radio Network. Today on Real Life Radio. Didn't Jesus say in John chapter 10, verses 28 and 29, you who believe in me, you're in my Father's hands, and you're in my hands, and
Jimmy was freaking out for a second.
get it done.
Five things to know ahead of today's opening bell. President Trump announcing tariffs on imports from Canada of 35% effective August 1st. In a letter to Prime Minister Mark Carney posted on Truth Social, Trump attributed fentanyl as a reason for the higher rate. Secretary of State Marco Rubio met with China's foreign minister in Malaysia today. It's their first in-person meeting as trade tensions between the two countries continue. After the meeting, Rubio said a summit between Presidents Trump and Xi is likely. And Google has reportedly reached a deal to provide cloud computing services for the U.S. government at a heavily discounted price. The Financial Times reports the deal could be finalized within weeks. Oracle cut a similar deal last week. And Apple is planning a slate of new product releases for the first half of 2026, including a new low-end iPhone, multiple iPads, and upgraded Mac computers. That's according to a Bloomberg report citing people familiar with Apple's plans. And Flutter Entertainment has reached a deal to take full ownership of sports betting platform FanDuel. It's buying Boyd Gaming's 5% stake in the company for $1.76 billion. The deal values FanDuel at $31 billion. Flutter says FanDuel holds 43% of the sports betting market.
So there's no, it doesn't have to be 5 news stories necessarily, because I did the Apple story already in this. So these are 5 things you need to know. I thought it was things other than that we've already mentioned. That's
It doesn't. The name of the segment is not 5 things to know that we haven't mentioned yet.
That's what I was assuming, because we talked about.
No, it's 5.
Can I do a
things to
6th
know.
thing since we already did the?
That's like another segment if you want to do 6
Okay,
things.
I won't
Maybe
do
in
it.
the
Are
next
you
hour
sure
we'll
we
do
can
6
get all the
things to
news
know.
necessary to know with 5 things?
No, you can never. But they're the 5 that you need
Okay.
to know.
I think you're right. Coming up, the surge in interest in investing in private markets. We're going to talk to VC investor Ben Narrison next. That's the 6th thing for you to know. That we're going to.
Here's the 7th thing.
Yeah, and that's what he looks like if you need to know. And a reminder, get the best of Squawk Box in our daily podcast. Number 8, if you didn't know. Follow Squawk Pod on your favorite podcast app.
Here's the 9th thing you need to know.
That will
Be right back.
Right?
sustained.
We've been talking a lot about the explosion of interest in private markets. President Trump's spending bill could have a big impact. Joining us to discuss, Ben Narrison, founder of Tenacity Venture Capital, a seed stage investment firm, which I can't believe Tenacity wasn't taken.
There's another Tenacity out of India, and sometimes people get confused, but
Such a good name, but you were able to grab that. Not everybody knows about what's in the OBBB for you. And the way reading the notes, this is like, I mean, is it overstating it to say it's a game changer?
I think there's a lot of awesome stuff in here. I mean, look, nobody's happy about all the amazing amount of debt we're going to create and all the cash we're going to probably have to print. But I do think there's a pretty good chance we can grow out of this. The QSBS is an example.
Wow. Tell me what that is, yeah. It's expanded, right?
Small business? Yeah, that is awesome. So this is like the best gift that's ever been given to investors, other than capital gains, which, by the way, was pretty much created by a venture capitalist back in the 60s, a guy named David Morgenthaler. So QSBS is where if you invest in an early stage company, particularly prior to this bill, if you invested in an early stage company that had $50 million or less in assets, and you held your stock for 5 years, you got between a 50 and 100% reduction on your capital gains. It was meant to, encourage people to invest in smaller, riskier businesses. So that's been increased, where the companies can now have up to 75 million in assets, and you can actually take half the benefit after 3 years, 75% of the benefit after 4 years, all the benefit after 5 years. I mean, that's going to be so incredible. This is great for entrepreneurs who get the treatment. It's great for investors. You want to invest in a risky company, well, at least on the other side you've got this benefit. And also, look, it's great for funds because the LPs can get this treatment.
That's amazing. I immediately think that in terms of the way it appears, it's more very wealthy people getting more. It reminds me of like a carried interest or something. Here we go again. So you're 75 million and you're making all this money, when in fact you're promoting startups, you're promoting entrepreneurship. They create jobs. The jobs they create revenue for taxes and everything. But the knee-jerk reaction is going to be here's people getting rich people getting another tax break.
It's a silly argument. I think something like 40% of the jobs in the United States are from companies that were originally funded by venture-backed companies. The first $4 trillion company in the world, NVIDIA, was started inside a venture capital firm. It was incubated by Sutter Hill, one of the greats. I mean, these great companies, if you didn't have that company, it would be a whole different world. Like, jobs are being created, technology is being created, medicine's getting better, so many things that make our lives better. And here's the other thing, what people forget, when you go out and you invest, by the way, up to 75 million, when I invest in companies, they have, $1 million in assets. These are brand new companies, smart people, they quit their jobs, they could have made good money, now they're working really hard, taking a shot at it, they usually don't make it. Everybody looks at the ones that work. What about all the ones that didn't? It's a beautiful offset for people that are willing to take risks to create greatness.
I've got an answer for him. It was created by Bill Clinton and expanded by Barack Obama. The QSBS. That's all you got to say.
Yeah, I qualified
people just
for
genuflect and nod.
When I was an entrepreneur here in New York, and unfortunately I made a mistake and didn't get to take it. Cost me a lot of money.
What do you like AI? I can't even ask that question with a straight face.
AI, it's
investment?
silly. Nobody's going to touch that stuff. It'll die immediately. Of course AI is good. No, it's awesome.
Is it the fax machine like Krugman said that about the internet?
So, funny story. The first time I met Mike Bloomberg, which was long ago, I was a kid. And this was like 1992. First time was actually the only time. It was a small group of entrepreneurs. We go in, Mike, what do you think about this new thing, the internet? He said, you know what? The internet's going to be the biggest thing in the world. And I'll believe that when you show me a CB radio in your car. And I was like, what? So I think there's often a resistance to new things, and people worry about a lot of the impacts, but I believe AI is a net positive in so many ways that it's almost, look, when you create things, they always have a risk of negative impact. Fire. Okay, are you gonna not harvest fire and harness it because, oh my gosh, I could burn down the house? No, there's an enormous amount of things we can do. We've evolved as human beings because we can cook protein and eat it and become stronger and smarter, bigger brains because of fire. Okay, so yeah, every once in a while things go badly.
Do you invest in AI companies themselves, or do you invest in companies and sectors that can benefit the most from the productivity from AI?
Really good point. I mean, I do both. Because one, I've invested now in 3 AI-specific companies, particularly marketplaces like a Is it either a marketplace for the data or a marketplace for the GPUs? Then in addition, I would argue at this point, if AI, look, entrepreneurs will always put the most sizzly thing in their decks. But if you're not thinking about how to use AI in your business when you're doing a startup, I think you're not paying attention. That's like saying, we're really excited about all the horses we're using in our business.
Sure.
This new car thing isn't interesting to me. We don't need to worry about that. You have to worry about it. It's very valuable in so many ways.
Sure, but AI is going to be a tool. I mean, it's just because you use the internet or you sell over the internet doesn't make you an internet company.
Yeah, oh yeah,
Right,
absolutely. And I think the bloom is off the rose on the sort of AI crazy valuations for the most part, but you have to bake it in. You can't keep using steam power when you've got electricity just because you're stubborn and you don't want to act like, I was just talking to a founder that insisted on building everything from scratch. Took him 3 years. He could have been up in 6 months if he'd just taken what was out there already. So yes, AI has to be baked into the plan in a rational way. I'm not going to call you an AI company and give you 100 times revenue just because you added remember the .com era?
Yes.
What was the toy company that added .com and its market cap? No, there was like a legacy company that made this tchotchke garbage that was sold on late night TV or something. And they added
Pets.com too, I think.
Yeah, and boom, all of a sudden,
Right.
took off.
Do you think that we have the right approach to how we're ushering in the AI era? Enough regulation, not enough regulation?
Well, I think this is actually one of the net positives of the BBB and a lot of the stuff that has happened is that I just think it's so important to give AI the opportunity to grow. Could it need or value or benefit from more regulation? It's a reasonable debate, but there's two issues. Number one, who in the government is going to recruit the best and brightest? Zuck's out there giving a $200 million pay package to recruit the best and brightest. Show me the part of the government that's going to compete with that and say, no, come over here. Not going to happen. So we're not going to have the very best people regulating this, and therefore it's going to create challenges. By the way, I'd always rather trust private industry as long as there's rational oversight at the highest level. We have laws. That people have to do the right thing for the most part. So that part is important. Also, I don't think any of our enemies are going to care at all. I mean, they will do whatever
they
want.
like it.
Yeah, they love it if we handicapped our AI industry.
Right, and they like the nefarious uses for AI.
And they will use them for that. But we need to be able to defend against it. And so if we are sort of, it's like when medical science can't use certain things. For many, many, many years, you couldn't use, say, I don't have a strong opinion on this, but like the psychedelics for the treatment of certain disorders because they were considered a class something drug.
Right.
And now they've discovered they can actually be extremely helpful for people with certain conditions. But because they were sort of pigeonholed into this box, nobody could touch it for research. They weren't allowed to buy the products. They weren't, they couldn't get money.
Right.
So that's the same way AI is. Not to AI is like psychedelic mushrooms, but we should give our AI companies.
You can put guardrails. The Grok story disturbed me. That you can search how to find someone you don't like on social media, and here's the best way to attack them. And when it's kind of frightening.
Well, the reality of this data that's coming back is always you've got to double check it all the time. So I'm amazed. I paid for an upgraded version of OpenAI so I could have memory, and it forgets everything, and I'm constantly yelling at it now, which is good. I get to vent. I get to call AI an idiot instead of getting upset with whoever I'm talking to in the random environment.
That's good. Yeah, that's a really good use for AI, I think. Then.
Exactly. Who can you say, you're a moron, I'm sick of you, how can you be so stupid? Get it right this time, pay attention.
Like that AI band, your music sucks, you're horrible. Did you see that AI band? They got 4 band members, they're all cute, and like they look just like, and people are listening to the music, and they don't exist. I mean, I get it, it's hard to even wrap your mind, do you exist?
You never know. It's always uncertain.
I think you do. You seem very cyborg. You seem very human.
Have you seen those pants?
Yeah.
They exist.
Yeah, I could be the very.
Did we do it? Take a wide shot. Where you came from?
Yeah, it was.
You came from the beach.
You got me earlier than I expected.
Yeah, exactly. All right. Thanks for being here.
Thanks for having me.
Coming up, the DOJ greenlighting T-Mobile's deal to buy U.S. Cellular a day after T-Mobile said it was ending its DEI initiatives. The details next. Spot on. We'll be right back. U.S. antitrust enforcers have approved T-Mobile's $4.4 billion deal to buy U.S. Cellular. The DOJ said it was closing its investigation without seeking to block the deal, which was announced back in May of 2024. The announcement came one day after T-Mobile said it was ending its DEI program, saying in a letter to the FCC that it recognized that the legal and policy landscape surrounding DEI under federal law has changed. FCC Chair Brendan Carr has threatened to block deals involving companies engaged in DEI. T-Mobile is still seeking FCC approval to buy internet service provider MetroNet through a joint venture with KKR.
We still don't know exactly how much different this is going to be than the Lena Khan, but this looks like it's going to be different. Even though we've had Brendan Carr, who didn't really throw the prior totally under the bus, the prior administration's policies totally. And he said there were certain times, but then other people are perfectly willing to say, look, that was just throwing stuff up against the wall and not accepting any consent decrees. And
So we had Rob Kindler on earlier, who said it's a completely different environment for MMA.
You were here for that day.
I was here for a lot of the days.
That was Wednesday. That's right. He was great. Yeah. Coming up, copper prices jumping in the U.S. this week after President Trump's new 50% tariff on imports. We'll take a closer look at the metals market next. And then later, FDA Commissioner, this guy's famous, Marty Makary, who's going to join us to talk about the changes to health policy in the U.S. Made a name for himself during COVID, and now he's the FDA Commissioner. Spark Watson, we'll get back.
President Trump is slapping a 50% tariff on copper imports. The announcement this week puts the metals sector back in the spotlight. Joining us now is Craig Hutchison, TD Cowen Base Metals Equity Research Analyst. His coverage focuses on Canadian miners, and Canada is one of the top copper exporters to the U.S. Craig has highlighted a few names that could benefit from these Section 232 tariffs, including Capstone Copper, Hudbay Minerals, and Taseko Mines. Great to have you with us, Craig. And I'm wondering, given the new tariffs on Canadian products that are non-USMC compliant, and then you have the sectoral tariffs on copper as well, what is the ultimate tariff level? How should we be thinking about the copper coming from Canada?
Yeah, thanks for having me on the show. It's difficult to pin down right now. I think originally, I think that the thinking was going to be a 25% tariff on copper, and at the time, the spread between the LME, which is the main benchmark exchange, and the COMEX in the US is around 10%. Now the threat is around 50%, but the spread between those two exchanges is closer to 25%. So I think, it's difficult to say how it'll all shape out, but I think, the market is sort of factoring in something less than 50% at the moment.
Okay, so even though Canada specifically has a Canadian tariff and then the sectoral tariffs, the market is still assuming less than 50%.
Yeah, I mean, it's a global market, so I think that's the way the market's thinking about it, just across the two exchanges. In Canada specifically, a lot of the producers in Canada aren't necessarily impacted by the tariffs. U.S. does import a fair bit of copper from Canada, but the producers that we cover, particularly those on the West Coast, actually ship all their concentrate over to China, where it's refined and smelted into copper, then often imported back into the United States. I mean, the U.S. right now consumes around 2 million tons of copper, and they only produce around 1 million tons. So they're obviously heavily reliant on imports from countries like Chile and Canada, and in fact are actually reliant on China in terms of refining capacity and smelting capacity.
In terms of the broader goal of the copper tariffs, and that is to bring production back to the U.S. and to spur that sort of investment, can we do that? I mean, it takes, 3 decades or so to bring a mine from discovery to actual commercial production. But China did invest a lot, and it accounted for a lot of the smelter growth in the past decade or so.
Yeah, that's a good question. I think there are other alternatives that are probably more effective than tariffs, to be quite honest. I mean, policy reform is something, I think it's a bipartisan effort in the United States. The U.S. is still reliant on the Mining Act of 1872, which is obviously very outdated in today's climate. We've seen very effective policy changes for other industries, trying to stimulate the wind and solar industries, nuclear, but providing tax credits. Staffing up agencies like the EPA to make turnaround times for permits a lot faster. I think those policies would actually have a better impact in terms of stimulating U.S. production. Like you said, some projects take 2-3 decades to get permitted from discovery, and I think that's been probably the biggest factor in terms of stimulating the U.S. industry.
We highlighted some of the picks that you had in the sector, Craig, and I'm wondering, how those picks stack up to some of the U.S.-based miners and the other miners around the world.
Yeah, I mean, we don't cover it, but Freeport's probably the biggest beneficiary of the tariffs if they go ahead. Freeport produces around a third of the U.S. copper, and they also have domestic smelting and refining capacity, so they would be able to, produce a refined product that could sell directly into COMEX, so they would get that tariff premium. Companies that we cover that I think would benefit would be one's Hudbay Minerals. They have a good business in Canada and Peru in the copper business. They're also, trying to build a project in Arizona called Copper World. They're right now actively in discussions with partners. I think there'll be a lot of interest in that project, just given the fact that it's high grade, it's in Arizona, and they have the potential to produce a cathode. So they could be a beneficiary of these tariffs longer term. Taseko, more immediately, they have a project called Florence. It's in Florence, Arizona. They'll be producing cathode later this year and ramping up to next year. And so they would be able to capture that COMEX premium. And so we've seen some of these stocks have a really good run here in the last couple months on the back of the tariffs.
Craig, great speaking with you. Thank you.
Thanks so much.
It is 7 a.m. On the East Coast, watching Squawk Box on CNBC. I'm Joe Kernan, along with Melissa Lee. And among the stories that we're watching, President Trump announcing tariffs on imports from Canada of 35% effective August 1st. In a letter to Prime Minister Mark Carney, which was posted on Truth Social, the president criticized Canada for retaliating with its own tariffs instead of, in his words, working with the United States. NVIDIA CEO Jensen Huang met with President Trump at the White House yesterday. It's unclear what the meeting was about. We can imagine, though. NVIDIA has been grappling with export controls on its AI chips, and now Huang is headed to China. NVIDIA's market cap closed above $4 trillion for the first time yesterday. Right now, the stock is off just slightly. And crypto in rally mode, big time, bigly. Bitcoin topping 118,000, up more than 40% in the last 3 months. Ethereum now at the $3,000 level. And check out some crypto-related stocks, if you wouldn't mind. All up significantly this morning. You can see some by more than 3%.
Just got to check on the futures right now and how we stand after yesterday's record close on the NASDAQ, record highs in the S&P 500. We're pulling back just a touch here. S&P looking to be lower by 44 points. NASDAQ looking to give up 142 at the open. Let's get to Frank Holland with a look at this morning's pre-market movement. Frank, good morning.
Hey, good morning, Melissa and Joe. We're following a group of analyst notes this morning. Why don't we start off with shares of Tesla and Rivian? You can see they're both moving lower. Tesla down more than 0.5%. Rivian, same story. The EV makers, their price targets lowered at Goldman due to the signing of the One Big Beautiful Bill and the elimination of what's called CAFE penalties, basically fuel efficiency fines as electric vehicles. Tesla and Rivian, they made significant revenue selling credits on those penalties to gas automakers. Now, since there's no penalty for the standard, there's really no reason for those gas manufacturers to continue buying credits from Tesla and Rivian. Both stocks down just about 0.5%. Tesla just moving lower, down about 0.75%. Also looking at Freeport-McMoRan, also falling this morning after a downgrade to neutral from buy at UBS. UBS saying the metals miner could be hit by a downturn in copper prices in the second half of the year. They forecast a buildup in U.S. inventory ahead of President Trump's August 1st tariff deadline, and they say that could weigh on demand over the next 6 months. You see Freeport-McMoRan shares down just about 2% right now. Copper prices over the last week, they've jumped up about 7%. Also, rounding out things with shares of Texas Instruments, upgraded to buy from hold at TD Cowen with a price target of 245, moving it up from 200. Analysts there are seeing positive cyclical trends for the stock, especially around semiconductor destocking. Again, raising the price target to 245, one of the highest on the street right now, according to FactSet. Shares of Texas Instruments, they're up just about 1/3. Back over to you.
Thank you very much, Frank Holland.
Amazon's Prime sales promotion drop. Is it?
Today's the last day.
Really unbelievable.
Until the next Prime Day in 6 months.
It comes fast. It's like America's best state for business. It comes fast too, doesn't it? Courtney Reagan joins us with an update on this big week for retail. Was it not great?
We don't know yet, and it's really hard to compare because it's twice as long as it was before. So in general, it's actually been a pretty big week for retail. I mean, you've got these deal events led by Amazon's Prime Day, Levi earnings after the bell, and then more tariff developments. So a little less than halfway through Amazon's 4-day Prime event, what we know is that more than half of the household shopping had already placed more than 2 orders. This is according to Numerator's data analysis of more than 49,000 orders from 22,000 households. Again, that was about less than halfway through. Now, the majority of Prime Day shoppers tell Numerator they like the extended event and the discounts, with more than half buying something they've been waiting to buy. Then you had more than 1/3 that just bought what they normally buy, but on sale. So the top category is household essentials. Top 5 items: Liquid IV packets, Dawn Power Wash, Premier Protein Shakes, and Amazon's Fire TV Stick, and its everyday paper plate. So essentials. Important for this one. Now, more than 1/3 of Prime Day shoppers told Numerator tariffs did have an impact on their purchases, even though Prime Day shoppers skew high income, suburban, and female, aged 45 to 64, and they're price comparing. 69% also looked at Walmart prices, 46% at Target. Now, Adobe data backs that up because after the first day of Amazon's Prime event, Adobe online sales data shows all U.S. online retail sales grew 9.9% over the comparable period last year. So for a total of $7.9 billion, which for context is actually bigger than Thanksgiving Day online. Now, Adobe says the increase is driven by demand and not inflation or higher prices, and that 18 retail categories it tracks have seen prices fall for 34 straight months. Now, while consumers are shopping these discount events, Levi Strauss says they're also willing to pay more for its brand. Levi saw its AUR, the average price a consumer would pay, up year over year, also in a quarter that beat expectations for sales and profit. So it's been quite a week, and then obviously the tariff deadline or push to August 1st probably provided maybe some relief for at least a little bit more time to work through these mitigation strategies. So a lot going on, but the XRT flat for the week, at least as of right now.
Fascinating what you say about prices at this point. They're still falling?
I mean, that's what Adobe says in the 18 retail categories that it tracks, that for 34 straight months, prices.
I mean, it's starting to dawn on me. I may be Pollyanna, like whistling past the graveyard, but maybe the Fed was going to get the two. Maybe that, the post-pandemic surge that we saw because too many dollars and supply chain issues, but maybe we really were going back to.
I mean, there are so many things in a way that don't make sense. I still can't believe that what happened in 2020 happened the way it did, beyond the pandemic, but just the consumer resilience of all of that.
Right.
And it still sort of blows my mind. If you would have laid out those parameters and said, what's the consumer going to do?
Were we in a powerful disinflationary period when the tariffs came, and all it really does is just slow the disinflation instead of causing a rebound in what, because we all got so burnt by those 40-year highs, and
right.
No one got burnt more than Jay Powell, and we're fighting yesterday's battles. I don't know, but with the numbers we've seen, along with what you said, but all the recent CPI every month, waiting for something, and we haven't seen it. Maybe it still comes. Maybe it still comes, and then the companies. They get slapped by the White House if they even intimate that they're going to pass along the increases.
Right, but then you've gotten these studies from like Penn and Yale, and they say actually what can potentially be more damaging to the consumers in the economy is sort of this, call it half and half. And I'm being general there. I don't actually mean the companies absorb 50% and consumers absorb 50%, but to some degree, that can be worse if you share the pain and then you lose jobs and other things. There's sort of other ripple effects of that too. So I just don't think we know, right? Especially when we
especially we don't know what happens August 1st.
Right.
We don't even know.
That's what I mean. And so how can we predict it? I am afraid we haven't seen the pain yet. But then again, look what happened in 2020, 2021 with the consumer. I wouldn't have bet that would have happened.
Courtney, thank you.
I didn't buy anything.
Nothing, not a thing.
No, one thing.
You were just like, I'm just going to sit
I
here.
feel like you're not the primary purchaser in your household, though.
But like the right age, basically. It's not the right.
You're female,
right
suburban,
no,
45 to 64.
Not currently. Not currently.
I mean, that's what Courtney said was okay.
Not currently.
Clarifying.
Thanks for listening, by the way, Melissa.
No plans.
You really picked up on that detailing.
Coming up, the S&P 500 at a new high, just in time for earnings season. We'll take a look at what retail investors are watching right now. And later this hour, FDA Commissioner Dr. Marty Makary on everything from vaccine policy changes to funding cuts during his first 100 days on the job. That's 7:30 a.m. Eastern Time. Don't miss that. Squawk Box returns in just a moment.
Educator.com.
I do.
Welcome back to Squawk Box. Dozens of companies set to report next week, including financial giants JP Morgan, BlackRock, and Bank of America. Investors will also hear from PepsiCo, Netflix, United Airlines, and many more. Joining us now with more on the market, Stephanie Gill, Chief Investment Officer at Robinhood. Stephanie, great to see you. We were just discussing price targets, which for a lot of strategists have been very trying, difficult this year.
For the S&P.
Right, for the S&P. 6,200 is where you are currently, although you were higher at the beginning of the year, and now you see that old price target as a possibility for this year, 65.
Yeah, I started at 65 when tariffs hit. I said, GDP could come down and that could impact earnings. Usually 1% hit on GDP is about a 4% hit on earnings. We've seen earnings expectations come down. I said there was risk to 5,800, but I never went there. And now I think there's risk to 6,500. Obviously, we're over my target. So, with the pumping up of potential tariffs now, I'm just sort of waiting to see what happens.
You were never a panicking.
I was never panicking.
Yeah, because we got down to well below.
I just also think this was all driven by tariffs, but is driven by our president, who also I think cares about the economy and wants the economy to grow. So I just said I think this is the opening bid, and wasn't sure we would end there.
Right, 65 is good for me. I think you.
Right. You don't think 66 is better for you, or
66 would be better for me. Why you go 65 when you go 66? When Delta hit yesterday, I thought that was deep. Deep thinkers would have to, because Delta, it was still well below where they started the year for their forecast, but it was so much better than they thought a month or two ago. The stock got, the whole market got ignited from Delta.
Yeah, if you're out there traveling, you can see the airports are not empty. The economy is still growing. People are still spending money. Booking Holdings, for example, is still making money. So I was surprised. I think Delta was just trying to reimagine their supply. I think that's one thing they have pulled back on. I've noticed it from flying myself. But when you are managing your business, you can show better rewards. And if you're Delta and you see all that stuff coming out and there's so much uncertainty, you're, like many companies, you're probably going to move your expectations down a bit more than they maybe should be.
What will you listen for out of earnings season? Because you're going to get much sort of more real-time data than some of the economic data in terms of the reads of the consumer and business spending.
You're really excited about earnings this time around, aren't you? To see what's happening? I can tell.
I am, right?
I can tell.
It's a pivotal part, I think, because price earnings ratios are 21, 22 times. But I do think there's a lot of stuff in the hopper with the big beautiful bill. I think it's really illuminated. We have fireflies all over the backyard now today. I think it's really brought fireflies to certain parts of the economy. I think for bank earnings, that's obviously coming up first. The comps for this quarter are kind of rough. I think some of them had really good quarters, year over year. But I still think we can look past that, because I do think the financial sector and the banking sector should really benefit.
Despite the valuations on the money center, on the bigger banks.
Yeah, I'm more bullish on the regionals than the
straight at
than the large
half in terms of price to book.
Yeah, exactly. And I think they'll just benefit more from deregulation, and if we do get some rate cuts this year, which I think we should, but obviously there are reasons why they haven't been cut yet, then I think you do get a steeper curve, and then that does help also.
Is that the strategy within sectors? Because within sectors, even we're seeing a broadening in the markets in general. But even within sectors, you're seeing a rotation starting between the more expensive ones to the less expensive. You're seeing that in banks. You're seeing that in semiconductors.
Yeah. we run Robinhood Strategies, and we've pivoted to GARP, growth at the right price. So we still have tech in the portfolios, but we also like industrials, but specifically aerospace and defense and mid caps, because they actually are pretty cheap. Long-term average of mid caps is 19 times. It was 14.5. It's back to 16.
But not small, which are also catching a bit.
I'm not quite there yet. I feel like we just have to see what happens with short-term rates. They're more affected by, heightened short-term rates, because 30% of their debt tends to be floating rate. So I want to see what happens. Mid caps to me is the ignored middle child.
6,500. Does it matter what the Fed does this year?
Yeah, I mean, I think if they cut, then you definitely get 6,500.
If they cut anything.
If they cut anything, I think, because then it just like reaffirms what the market has been hoping for. But I'm worried about the labor market. That's where I think the biggest risk is.
I think it's cool you made the move to Robinhood. It must be cool working there and happening
it's
and
so
young
different,
and glad and everything. Yeah.
But it's amazing. Like it's just everyone works so hard and really has the mission is in our blood. I know that sounds cheesy, but it is.
No, I think I mean, you were at JP Morgan Private Bank for 21 years, so this was a big switch for you, was it not?
Huge switch for me. Yeah, but I did it because I said if there's a time to change, it should probably be mid-career and not the end of my career. So yeah.
Yeah. Great.
Stephanie,
Thank
good to see you. Stephanie Gill.
Coming up, Superman. We need another Superman movie, right? Returns. It's not a Universal movie, is it?
No.
Okay. Oh, yeah, just what we need. Another, no. Return to the box office. He's faster than a speeding bullet. Fast isn't always great, is it? More powerful than a locomotive and able to leap tall buildings in a single bound, but can the latest Superman reboot jumpstart a critical franchise for Warner Brothers Discovery? That's next as we head to break. Check out some of the studio and streaming stocks. Squawk Box coming right back.
BC Plus.
Superman soaring into theaters this weekend, kicking off Warner Brothers' new revamped DC universe. Joining us now, Matt Bellany, a Puck founding partner. I don't know what it is. I guess whatever business you're in, we think it is so interesting. I had so many things I was excited to talk to you about, but it's all in media, Matt, like your world. And then I'm thinking, Are people at home can't wait for Matt Bellany? I think so. It's right.
It's been a while. It's been a few months since I've been on. I missed you.
Yeah, I miss you too. Let's start. I mean, it's better for AMC and other people like that. I mean, things are going a little bit better. Jurassic and Superman, and it's a good summer.
So far, the numbers are not back to pre-pandemic.
No,
numbers,
better. No, still not, but better.
No, people are showing up though. If the movie is right and if it's appealing, people will show up, and that is the key question, because there was people that were saying, nope, movies are over in theaters. Doesn't matter what's there. People are not coming back, and that is not the case. We still have billion-dollar movies out there, and it's looking like the Superman movie probably won't get to $1 billion, but the reviews are there. The fans are going to like this movie. The marketing has been good. It seems like they kind of won with this Superman movie.
Which is no small feat, because there was even the TV show, a couple of TV shows. There have been so many Superman. I don't know. I'm trying to figure out which ones I really. It's almost like James Bond. There's so many different ones, and I've seen comparisons to the brooding Henry Cavill and the icon of Christopher Reeve. People like this guy because he's what? Because he's human or conflicted or emotional. What is it? Quirky?
That's been the problem with Superman over the years, is that he's not human. He can't be killed. And he's not as relatable as some of the other superheroes, particularly in the Marvel universe. And Superman, honestly, in the past has been kind of boring. And I think the thing that's interesting about this Superman movie is the first time you see him on screen, he is hurt, he's on the snow, he's bloody, he's kind of down and out, and they do a very good job in this movie of sort of humanizing him to the extent possible, giving him conflict, giving him a little quirk to his character. And I think that is the secret sauce there that James Gunn, the filmmaker, who's also the co-head of DC, has brought to this character. And that was the first thing that David Zaslav did when he took over Warner Discovery, is he got rid of the film head, he got rid of the DC head, and brought in new people. And now 3 years later, they are finally debuting this first reboot in the DC universe. And if this goes well, they've got Supergirl, they've got a bunch of other DC properties that are going to benefit if this Superman movie does well.
That's amazing. So it really is important for Zaz and for Warner Brothers Discovery, which has got a lot of other moving parts at this point. It's not a panacea, but it would be nice.
No, and the stock does not trade on whether a movie opens or not. The stock trades on their overall financial condition, which is largely governed by the television side of the business, and we all know that's going down.
Well, let's get to that and talk about that. Talk about, my own company here with Versant and Zaz. Iger's not going to do it. Are the legacy assets still worth something? What does the future look like for the entire industry, Matt?
Well, it seems to be a sell-off right now, or at least a split-off, where Warner Discovery and NBC Universal splitting off the cable networks. We saw this past week that the cable networks that are owned by Disney and Hearst, the A&E networks, those are now up for sale. They're testing the market to see if someone out there would like to take those off. And it's a matter of whether these declining television assets, no disrespect to my friends at CNBC, whether they can get value for those still while splitting off the growth assets and allowing the rest of these companies to grow. And that's the strategy right now. We're going to see if it works. We haven't actually seen it in practice yet, but this time next year we'll see the Versant networks probably split off, and we'll see, hopefully in Zaz's case, we'll see the Warner network split off, and there's going to be this other asset base out there of declining television networks that still throw up a lot of money.
Exactly. And not to make everything dependent on how Hulu did, but I don't know. That wasn't the end all be. People were scrambling. We were seeing valuations for Hulu, and Comcast was going to wait. When it was all said and done, it wasn't really worth that much more than we thought. Matt, I don't know if streaming's the answer. Will there be buyers and will there be roll-up people for these cable assets? Will there be people that just want out? How's it going to work?
Well, one theory says that it's going to be the Versant people. Mark Lazarus and his group are just going to start acquiring and building up that company with the cable assets of all of these other companies, and there will be this one big asset. I'm not sure that's going to happen. I think we'll see a mix of that. I think private equity will come in, and it'll be similar to what we've seen with the newspaper industry, where you have these big private players, Alden Capital, some of the others, that swoop in here and see the revenue coming into these entities and say, okay, we can manage these for cash. They're not growth assets, but we can cut costs. We can make money on these for a certain number of years, and we'll see that start to happen in the television side. And meanwhile, over on the streaming and studio side, they hope there will be a growth business via consolidation, via cost cutting. We've got new owner Paramount likely coming in. It's going to be interesting.
Well, that's what I wanted. That's the next place I was going to go. That's why I said there were so many things I wanted to talk to you about. Was it you that said that David Ellison or that, I don't know who it's going to be, Jeff Shell, his point is what's going to happen at CBS? And is that going to close in the next couple of weeks? And you talked about is it 32 million? Is it 15 million? What do we know about what that settlement was with the Trump? And is it over? Does CBS have to do anything else? Do they have to change CBS News?
A lot of questions there, and there's what we know and what we're speculating about. What we know is that Paramount has agreed to pay $16 million to the Trump administration, to Trump personally, to settle the litigation. And the expectation is that that is what was holding up FCC review of the overall sale to Skydance. Now, I believe that in the next month or so, we will see the FCC approve that Skydance transaction. The question is whether there will be additional things that they have to do to get it approved, meaning there may be some DEI commitments, there may be some agreement to spend money on PSAs supporting Trump's causes, or things that the FCC will call fairness or anti-bias. That is where some of these estimates that the true settlement will be up there in the 30 millions. Trump said 32 to 35 and sort of suggested that there were additional strings. Paramount has denied that they are going to pay anything extra. Ellison and Skydance has said nothing. So we assume that there will be some additional hurdle that they have to go over to get this approved, but I think it will get approved, and I think this transaction will close.
So I've also seen Ellison's going to be hyper laser focused on sports and live programming. Does that mean not focused on news, not focused on, does he have ideas for what to do to CBS or 60 Minutes?
Oh, they have lots of ideas. They've been sitting there stewing for more than a year of what they're going to do with this company if they take over. I think there is a plan for CBS. I mean, don't forget, they've talked about $2 billion in cost cuts. And most of those cost cuts are going to come on the television side. Now, I think it's going to be focused on a lot of the cable networks. The Viacom cable networks are particularly challenged. Those are the MTV, VH1, those, because they don't have sports for the most part. Sports are obviously driving the train here. Roger Goodell said on CNBC this week from Sun Valley that they are going to look closely at their deal with CBS. They have a good relationship there, but they have a change of control provision. They could demand all kinds of things from CBS when that deal closes, and they're going to look at potentially opting out in 2029. So they've got to fix that. They've got to keep those NFL rights in whatever capacity they have, and they've got to try to grow. I could see more sports content on CBS during the week. They don't really do much NFL outside of Sunday, and this trend in broadcast television is to eliminate original programming and go with cheaper shoulder content for sports, reality news, all of that. I think we're going to see change.
You picked a good business. I don't know. It's interesting to me. You must be working 18-hour days. You're working hard on the phone a lot, I can imagine.
Absolutely. Well, it's 4:30 in the morning here, so yes, I start early.
That's good. Thanks for being with us today, Matt. Matt Bellamy.
Thank you.
Founding partner of Puck.
Coming after calls for Tim Cook to step down at Apple greatly exaggerated. The stock is up nearly 1,500% during Cook's tenure as CEO. The iPhone is one of the most dominant tech products in the market today, but Apple's AI strategy has stumbled. We'll have a debate over Cook's job and the stock coming up. And later, Office of Management and Budget Director Russell Vought is calling out Fed Chair Jay Powell, saying he has grossly mismanaged the Fed. That's at 8:30 a.m. Eastern Time. Squawk Box returns in just a moment.
And make it count.
Coming up, Dr. Marty Makary on his first 100 days as FDA Commissioner. He joins us next in a wide-ranging interview covering everything from regulation changes to new vaccine policies. Squawk Box returns in just a moment.
Join Jim.
Our newsmaker this hour, Dr. Marty McCary, the FDA commissioner, marking his first 100 days on the job. It's been a busy few months with many changes at the agency, from vaccines to staffing. Good morning, doctor.
Good morning, Joe.
Maybe you've been on a few times. I don't remember, but we all went through that period together, obviously, and there's a lot of a look back now at that period. And I was, it's a hot button issue, and sometimes it's tough to talk about. And there's conspiracies and controversies. I think of Novak Djokovic. Right now, he's going to be in the finals, I think, at Wimbledon. And at the time, I wondered about his decision, the decision of tennis. What do we know now, doctor, in your view, about what we should have done with COVID? Should healthy people have been not forced, but strongly coerced to take that? At the time, I thought it was a game changer and a lifesaver.
Well, look, Joe, I had said during the time of the pandemic that if we have vaccine mandates for young, healthy individuals, we were going to see a rise of an anti-vaccine sentiment, and I think that's exactly what happened. We saw a tremendous loss in public trust. A study in JAMA, found that 71% of people trusted their doctors and hospitals before the COVID pandemic, and that's down to 40%. That's a 31-point drop. And I think it was from ignoring natural immunity. I think it was from vaccine mandates insisting that soldiers and firefighters and teachers be fired if they don't have the vaccine, even if they were young and healthy and had the infection already. They had circulating antibodies that could neutralize the virus, but they were antibodies the government did not recognize because it failed to recognize natural immunity. So we lost a lot of ground in public trust, and we're trying to rebuild that now through radical transparency and being very honest and telling people the government is not your doctor. Talk to your doctor and get good advice from your doctor's wisdom and judgment.
There are some changes at the Vaccine Advisory Committee that a lot of hand-wringing and consternation about the new members. Is it anti-vax? Doctor, would you say, how would you describe your approach to preemptive disease management?
Well, look, I think over at CDC, a different agency, they do have a reconstituted ACIP committee with a diversity of views among people who do believe that vaccines save lives. The past committee had pushed for COVID boosters in young, healthy people. And of course, that is probably why we see such a backlash today. There was never great evidence for repeat boosters in young, healthy children. As a matter of fact, there was a myocarditis risk that was largely downplayed in young males. And I think if you look at the track record of that committee, there's a reason why 85% of healthcare workers did not get a COVID booster last fall. So we are taking an evidence-based approach. Dr. Vinay Prasad and I outlined it in the New England Journal of Medicine, and we're basically saying that there's got to be a risk-stratified approach. That is high risk versus low risk. Does a healthy 12-year-old girl today need another 60 doses in her average lifespan? That is a scientific unknown, and we'd like to see a clinical trial before approving the vaccine for that reason.
How does removing the recommendation, though, increase choice, increase the patient's ability to come to a decision with doctors, since so many insurance plans and programs depend on ACIP and CDC recommendations in order to provide the no-cost, low-cost vaccines? Isn't this removing choice effectively from patients?
Now, the promise of the Secretary Kennedy is to let people know that vaccines will be available if people want them. You will be able to get a vaccine if you want them. So that's a decision between you and your doctor, and each individual insurance company has their own policy. Look, some insurance companies don't pay for important cancer treatments that for patients that I saw as a cancer surgeon. And so that is another entire issue that's unrelated to the FDA.
Okay, so insurance, so the fact that private insurers, employer-sponsored insurance plans, Medicare Part D, Medicaid, the Vaccines for Children program, all of them link providing no-cost vaccines to CDC and ACIP recommendations. That removing the recommendation doesn't remove in some way the choice that patients can make, especially the vulnerable patients who may not be able to afford to pay.
That's right. It does not remove the choice. And our job at the FDA is, and this is a charge by Congress, is to look at applications that are submitted to us and determine what is safe and effective. And so that is what we are committed to. I think there was some lost trust in the FDA when there was a new policy that basically said for a young, healthy 15-year-old boy, we were going to rubber stamp a COVID vaccine without a clinical trial every year in perpetuity, and the kid must get it. And I think we're saying we're going to be less absolutist when there's no evidence. I think the most dangerous thing you can do in public health is to demand something of a young, healthy individual when the evidence is just not that supportive for a new virus that creates a new protein and a new vaccine that creates a new protein, where we haven't had a clinical trial in over 4 years. And those results in children were mixed back 4 years ago.
The basic tenets of MAH, of MAHA, or Make America Healthy Again, it seems to be it's proactive healthcare versus reactive. You'd have to do that with children, I think, and I immediately think about as a country, our levels of obesity are just much higher than they need to be or should be. What does tackling that entail, and how does it play into these new drugs, and whether you really start, I don't know, is that what we need to do to all our kids with Wegovy or Ozempic or something, doctor? Or what's the answer? Is it foods? Is it additives? Is it, the secretary has a lot of ideas.
Yeah, it's all of the above, Joe, and we've not been talking about root causes in healthcare. I've been in academic medicine and been at all the major institutions giving grand rounds. We don't talk about root causes. We don't ask, why do 40% of our nation's children now have a chronic disease? Why do a third of our nation's children now have prediabetes or diabetes? We've got to talk about school lunch programs, not just putting every 6-year-old on Ozempic. We've got to talk about environmental exposures and chemicals in the food, not just chemotherapy. If you look at the types of cancer that are going up in young people, they are the GI cancers. That is the organ that interfaces with what we eat. So we've got to look at all the chemicals. We are doing an inventory of the 1,000+ chemicals banned in Europe that appear in the U.S. food supply. You saw our action to remove all 9 petroleum-based food dyes from the U.S. food supply by next year. We're getting tremendous participation by the food manufacturers. We are looking into baby formula innovation. That recipe the FDA issues hasn't been updated essentially in 30 years. We need more innovation. Moms want baby formula without added sugar, without corn syrup, without seed oils. We need more innovation. It's been a regulatory failure. And we're asking the big question, why does it take 10 years for a drug to come to market? I mean, that is a giant existential question, and we're going to have to challenge deeply held assumptions to answer it. So we announced our program to reduce animal testing and replace it with computational modeling and organ-on-a-chip technology, whereby drugs can be tested on cell culture medium in a lab with cells from the liver or heart or other organoids. We have a priority pathway now to pilot. Can we get a decision out in weeks instead of a year once that final application is approved? Can we run more continuous trials? And can we use AI more in the review process? We now have AI agency-wide for our reviewers. And yesterday we announced we're going to make our decision letters, including rejection letters for drug, public information so companies don't spin the results and developers can see exactly how the FDA thinks. And that's part of our radical transparency agenda.
I wanted to talk to you, Dr. McCary, about the national priority vouchers, which does aim to speed up the approval process after a final drug application is submitted, to get it down to 1 to 2 months as opposed to 10 to 12 months for national priorities. What qualifies as a national priority? I mean, let's say there's an obesity drug that's even better than the ones out on the market. Is that a national priority for the FDA to consider an expedited process? What falls into the category?
Great question, Melissa. So it's a large unmet public health need. It is a priority identified as part of a U.S. domestic national priority, like the domestication of manufacturing as a national security issue. And look, the president is very adamant that he would like to see lower drug prices for Americans, and he doesn't like it that Americans are getting ripped off with drugs that are 2, 5, 10 times higher in the United States than in London or France or Germany, other OECD countries. So we are including the affordability of drugs as a national priority. So we have a committee that's set up that will determine which products and companies will get these vouchers as a part of a pilot. Look, we got to try new things. We've got to ask ourselves, why does it take so long for a cure to come to market? And we want to see more cures and meaningful treatments for Americans. We want to see big data used so we can have eyes on a drug immediately after approval and not just wake up 5 years later and say, hey, Vioxx may have killed 38,000 people. Maybe we need to take action. Or opioids may have killed nearly 1 million Americans 19 years after the approval of OxyContin. We're going to be having an incredible post-market surveillance program where we monitor drugs immediately after approval using big data and the cloud. And if we do it well, it can actually change the threshold for approval, especially when it comes to rare diseases.
Can you give us an example of a health crisis right now? Just so we have an idea of what sorts of drugs, what sorts of companies may be seeking to use this national priority voucher program?
You know, one of the cool things, Melissa, in this job is you get to see potentially promising treatments that are in the pipeline. And I'd like to see a cure for type 1 diabetes. I'd like to see more cancer therapies that apply to stage 4 metastatic disease and cancer therapies that result in what we call in medicine a complete pathologic response. That is, the cancer melts away. There already appears to be some therapies that may enable cancers to shrink and go away completely. That is, be eliminated without chemo, surgery, or radiation therapy. I'd like to see a universal flu shot so we don't have to try to guess each year which strain is coming. There are candidates out there. And I'd like to see treatments for neurodegenerative diseases and other disabling diseases. I had an aunt who died of Alzheimer's disease. I'd like to see more in the neurodegenerative space.
A lot of angst and panic about layoffs at the FDA. I don't. Can you? Was it bloated? Did it need restructuring? Is 15% a big number in terms of layoffs, doctor? Because there are some people that say it's going to safeguarding the drugs that come into this country, manufactured elsewhere, are at risk now. There's not enough people to monitor. What do you make of that criticism?
That's not true. So there were no layoffs to scientific reviewers or inspectors or our law enforcement division at the FDA. We do inspections around the world, and we're leveling the playing field on that front. But there were early retirements, and so we're actively hiring scientific reviewers. Normally there's a vacancy rate because there's a turnover in scientific reviewers, but no scientific reviewers were laid off. There were tremendous redundancies in the empire building culture, the fiefdoms of the centers at the FDA, and they became their own, independent organizations, and they had very little accountability. They had their own revenue stream from user fees, and they had redundant services as a result. That is, we had 12 different travel offices. We had nearly 2,000 HR people and budget and procurement staff, and a lot of it was just because of the center fiefdom culture. So we've consolidated that now to say if we're going to launch AI for the FDA reviewers, as we recently did, we're going to do it agency-wide. It's not going to be each center independently with their own IT teams coming up with a product. Just look at our adverse event reporting systems. They are so clunky, Joe. We have one for vaccines called VAERS, one for devices called MAUDE. We have VAERS and CARES and FAIRS and Sentinel. We have 10 different adverse event reporting systems, all sort of independently developed. We're going to go to one, and so that way we can have a great user interface and a great database of adverse events that we can use for our post-market surveillance of drugs.
Doctor, I also wanted to ask you about your quest to make the FDA more transparent, and part of that was yesterday releasing more than 200 rejection letters, as you had mentioned before, to the public, so the public can actually see why a drug was rejected, as opposed to getting a press release from the company, which may or may not give the full details or may have spin involved, etc. The letters were from 2020 to 2024, and investors at least are wondering if it's going to be more real time, because that's the only way it's really going to be useful.
Yeah, let me be clear, Melissa, it's going to be real time. That was just the initial batch because we need time to do the human redaction of those letters. So I know some media outlets were, hours after our announcement saying, oh, some of the, this is only part of the stack of all the letters. We have thousands of letters that we are redacting. We're going to make them public. Drug developers and inventors are going to be able to go through them and see not just how the FDA thinks, but how one study section of the FDA thinks, the study section of interest. And we're going to be releasing them in real time as we make decisions. And that way shareholders will be able to see exactly what the FDA said. Look, markets like predictability. And I've been doing a CEO listening tour. We're about 2/3 the way through. It's in 7 cities. And when we meet with pharmaceutical CEOs in private, that is where they can be open and honest about their ideas for reforming the FDA without their shareholders listening, they tell us they want more predictability. They want to know exactly how the FDA thinks, and they want better communication so they can, one CEO said, if we could just have a couple 15-minute calls with the FDA review team along the process, it could save us nearly a year of doing things just out of guesswork and trying to figure out what the FDA wants. So we're going to be radically transparent.
When can you come back?
I love your show. I'd like to see fewer direct-to-consumer drug ads on your show, but I love your show.
I was just going to ask you about
and
that.
I'll come back.
I was going to say I want to talk to you about that. Because I still want this purple pill that's on nightly news every night. I don't know what it does. I have no idea. But they make me want it so much. I've been bugging my doctor, give me that purple pill. It's crazy, doctor. Why do we need... if you need something, does the doctor need to be sold on something on TV for him to prescribe or her to prescribe the right thing for you? What's the whole rationale behind all these things? All I know about are side effects I never want to get all over my body. That's all I know from these things. And I see people, overweight people marching along the street. Where are they going? What are all these things and why do we need them?
Yeah, they're always singing and dancing. They're always singing and dancing. And we have a regulation at the FDA. And I know sometimes you're at home totally healthy. You just get back from the gym and you're watching these ads nonstop and you want to say, okay, I give up. I'll take it. I don't know what it is.
I don't know what it is. But I don't want it.
There's a regulation that says there should not be a misleading impression from these ads. And so we're taking a hard look at that.
I also want to talk to you next time about autism rates and whether it's environmental. It seems genetic. It seems the diagnoses are exploding. And what about care? What about all the people that already are growing into adulthood? And that's even might be a bigger issue than trying to figure everything else out. There's millions. There's millions that we need.
The entire medical establishment has only been talking about treatments, and now we've got to start talking about root causes and research on root causes.
All right, we'll come back and we can talk. I know what that blue pill does, but the purple one, it just depends on the colors. Anyway, Dr. McCart, thank you. Squawk Box coming right down.
certain.
Very rare. It's 8 a.m. on the East Coast almost, and you're watching Squawk Box on CNBC. I'm Joe Kernan, along with Melissa Lee. Becky and Andrew, obviously, are off today, but they'll be back on Monday, I think. Among today's top stories, President Trump announcing that the U.S. Will apply a 35% tariff to all imports from Canada beginning next month, reviving tensions with a major trade partner. The president also revealing that he plans to impose blanket tariffs. Why pick on blankets? Why?
Blankets.
They are. And imported from where? Imposing blanket tariffs of 15% or 20% on most trade partners. No word on whether it would be on sheets and pillowcases as well. No, blanket across the board. Tesla's going to open its first India showroom in Mumbai next week, marking its first entry into the world's third largest car market. The EV maker will launch its Experience Center on July 15th. And Google has reportedly reached a deal to provide cloud computing services for the U.S. government at a heavily discounted price. The Financial Times reports the deal could be finalized within weeks. Didn't we hear something similar from Oracle, I think?
Yep, just last week.
Getting some nice discounts for Uncle Sam.
Or Mr. Trump.
Mr. Trump.
Let's check on the futures at this hour. Pretty steady throughout the morning here. S&P looking to lose 35 at the open, backing off the record highs here. NASDAQ also looking to back off the closing record high that we set in yesterday's session, down 112 at the open. Dow looking to lose 270. For more on the markets, let's get to Mike Santoli at the New York Stock Exchange. Good morning, Mike.
Morning, Melissa. Yeah, just a modest, maybe half step back in the S&P 500. Yesterday's all-time high was like a point above a week earlier level. So we've basically been hovering around this area. We came into the week running a little bit hot. The index has tried to cool off by kind of rotating around. Some of the biggest leaders like JP Morgan, Netflix backing off, the average stock doing better. I would say, again, you go back to like 6150 on the S&P. That's, multiplied by 10 to get the index here. That's sort of a normal spot you would back off to if we're going to have a little bit of a pullback. It's also where the 20-day moving averages, that's sometimes a short-term technical kind of signal. So in good shape, but definitely stalled out and trying not to overreact to all the tariff headlines. That's been the theme of the week. Take a look here at the relationship between the NASDAQ 100 and the Russell 2000. I think it's probably surprising that on a one-year basis they're in the same spot. But why are they in the same spot? 1 year ago today, July 11th of last year, was a CPI report for June. It was a downside surprise. It had everybody thinking, okay, we can get some rate cuts in the near future. Russell 2000 soared. NASDAQ 100, the Mag 7, declined. You had this massive forced rotation. Now, it also ended up being kind of a mini correction going into August and September. You had some other things going on. So it was a little bit of a messy transition, but this is where we are in the same place here. Of course, we're getting CPI for this June next week. Take a look at the volatility of volatility. The VVIX is the volatility of the S&P 500 volatility index. It's pretty low right here. So it shows that there has been a calm rotational market that has kind of drained away a little bit of the drama. Again, market is trying not to be fooled again by kind of overreacting to some of the tariff headlines. We'll see if reality sort of calls Wall Street's bluff on that one.
Yeah, bond volatility also low. Mike, thanks. Mike Santoli. Well, Apple's reportedly planning to announce a new lineup of products in early 2026. Bloomberg says this includes a low-end iPhone 17e, updated iPads, refreshed MacBook Pros and Airs, and a new external Mac monitor. The news comes as some analysts call for CEO Tim Cook to step down amid concerns over the company's slowing growth and product delays. Joining us now is Craig Moffett-Nathanson, founder and senior managing director, Dominic Rizzo, T. Rowe Price Global Technology Fund portfolio manager. Let's be clear, this is Walter Piecyk over at Lightshed Partners. I spoke to him on Fast Money a couple nights ago when his note came out. And Craig, I'm just wondering, because you've been a bear on Apple for quite some time. It's been a great call. Apple stock is down 15% so far this year. Is the answer to get a new CEO?
Good morning, Melissa. No, look, probably not. I mean, look, let's step back for a second. Tim Cook has presided over a 15-fold increase in Apple's stock price. He's trying to fill the shoes of the person who is broadly regarded as the greatest CEO in history. So those are big shoes to fill. That's obviously a pretty tough compare. But he has been an extraordinarily successful CEO. You hear all the arguments about he's a process guy, he's not a product guy, and that sort of thing. Perhaps that's true, but they have been extraordinarily good at process, and it's generated a huge amount of value. And I don't know that you can look to the CEO as some kind of messiah who's going to generate the next product idea by himself. What Apple is struggling because, number one, they are struggling with an answer to AI, but number two, they have a lot of macro headwinds against them, like tariffs, at a time that they're trying to manufacture in China. Tim Cook started 10 years ago to try to transition that to India, so it's not like he's been caught entirely flat-footed. It's just these are hard problems to solve, that's all.
Yeah, Dom, I'm curious what your thoughts are. You are underweight, I believe, in your portfolio, Apple, relative to some of the other Mag 7 stocks. So what causes your hesitancy? And maybe it is no surprise that Apple wouldn't fare as well in this environment as, say, a Meta, which has had an unbelievable performance this year relative to the group. Since Apple is a hardware manufacturer, it does face a lot of these threats that others do not.
Yeah, first off, thanks for having me, guys. It's great to see you. When I look at Apple, I really have a balanced approach here. On the positive side, just look at how much time you spend on your screen every day. It is still the most important product in the world, the iPhone. We also have wonderful unified memory architecture on the silicon side, which theoretically is great for AI. Now, Craig made a great point, though. The reason Apple's struggling, frankly, is because they're nowhere in AI software today. And that's why we're underweight across all of my strategies. When I look at the AI software that Apple's delivered, it's really disappointed on every level, whether it's small language models, large language models, Siri, AI on device. And I think they need to make some fairly drastic changes on the AI side to get that upgrade cycle back, which is elongated to one of the longest levels ever. So I actually think they have to go turn around and make some acquisitions to make this work. Maybe something like a Perplexity could solve some of their problems.
Craig, is the only answer an in-house AI solution, or can it be the best delivery system for AI software that it licenses or partners with another company?
Well, I think it can theoretically be either one, but here's the problem, Melissa, and I don't hear this enough, and Don made a great point. Look, to believe in Apple stock, and again, you called me an Apple bear. I'm not an Apple bear. I think very highly of the company. I just think it's a very overvalued stock, that's all. And I think they face some secular challenges that are not reflected in the stock price. Part of that is the market is discounting an extraordinary acceleration in the upgrade cycle, right? Remember, go back to last year's WWDC when the stock price ran up because everybody thought, here comes AI, and AI is going to require 8 gigabytes of memory, it's going to require a neural processor, and that means that everybody with a phone that's earlier than an iPhone 15 Pro is going to have to upgrade their handset, and that's going to be a giant cycle, and it's going to be perpetuity and blah, 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 blah. If you go off the device and you choose a solution that's in the cloud, that will work. It may give up something on privacy, although you can probably run it on Apple hardware and Apple data centers. You can probably win the privacy argument. Mm-hmm. But if you take it off the device, you've given up the argument for why there's an upgrade cycle. And so I think you have to step back and say, okay, no one's arguing here that Apple customers are going to switch to Android. That's not the issue. The issue is, what is it that's going to drive an upgrade cycle and a permanent acceleration in the rate at which we upgrade phones, such that you can work your way into a 28 times multiple and a PEG ratio that's right now almost 2.5 times.
Yeah. Craig, apologies for calling you a bear. You're accelerating on Apple. I should have been more clear. Thanks, guys, Craig and Dom.
Thanks, guys.
Coming in, Senator Bill Cassidy is looking to save Social Security. He joins us after the break to explain his plan, and later an exclusive interview with incoming PGA Tour CEO Brian Roloff, live from Sun Valley. Squawk Box will be right back.
Republican Senator Bill Cassidy and Democratic Senator Tim Kaine are hoping to help rescue Social Security. In a Washington Post op-ed this week, the senators proposed diversifying trust fund investments in order to maintain benefits. Senator Bill Cassidy joins us this morning. He chairs the Health Commission. Senator, this has been bandied about for years, I think. What's the current investment, just for people that aren't familiar? What's it invested in now? What's the current return, and what would the new idea hope to get, and what would it be in?
So the trust fund, the extra money that's in the Social Security Trust Fund, by the way, good morning, Joe, is invested in treasuries. And so some of those were issued a while ago, so they're bearing 1, 2, 3, 4%. We're losing money on those treasuries right now. What we propose is a separate fund from the Social Security Trust Fund, in which we would put $1.5 trillion in it over 10 years, invest it in the U.S. economy, hold it in escrow for about 65 to 75 years, and then use that return to offset any unfunded accrued liability in the Social Security Trust Fund.
Okay, where do we get the 1.5 trillion?
Yeah, so the way the U.S. budget works, if we borrow $300 billion a year for 5 years and put it in the trust fund, and we hold it in escrow, it offsets the borrowing. So it doesn't contribute to the nation's indebtedness because you got the money. If you want to pay off the bills, you just kind of like dissolve the escrow account. And so it doesn't increase your debt or deficit. So we would borrow that money over 5 years, put it in this separate fund from the Social Security Trust Fund, and bail out the fund. Because everybody should remember, Social Security is going insolvent, the trust fund, in 8 years. At that time, by law, benefits will be cut as much as 25%.
This has worked in the past, not at this scale, but it can be done. If there was a 10-year secular bear market, would it still work?
It absolutely would still work because we keep it in the account for 70 years. And so if you look since 1929, the Great Depression, Great Financial Crisis, the 70s, we've had about an 8.54% annual return just in the stock market, not including other assets. And so we would go through those times. But by the way, we modeled this through the Great Financial Crisis. And the Great Financial Crisis, of course, it dips down, but within like a year, it's back up to where it was. The power of our economy is so great. Lastly, I will say, even if it only offsets 60% of our unfunded accrued liability, that's a lot better than we're doing now.
Any other assets that you would, this would be a big step, obviously. I guess crypto would be out of the question, Senator.
Joe, you don't want me deciding where the money is put. I can promise you that. You know what I'm saying? I don't give financial advice. But we would have patterned after the thrift savings plan, which the federal government already does. There would be an independent board of people, an arm's length away from Congress, with strict guardrails to keep the president and to keep Congress from messing with their investment decisions. There'd be an audit every year, and it would be posted online. And so the public would be able to watch where it's invested. You ain't going to see me doing it.
And it'd be safe, right? I mean, God knows when people need money in Washington, they go after anything that's available. Is there a way of making sure it's not touched?
So the federal government already does this. They do this sort of system with the Federal Railroad Retirement System.
Right, works for them, yeah.
It works for them, great. And for the thrift savings plan. So we took those same guardrails. We had Heritage Foundation help make them a little bit stronger. We had David Walker, the former comptroller of the U.S. currency, make it even stronger yet. We put them into law. And then we said, Congress, if you ever do anything which decreases the return on investment, you got to raise taxes to make up for it. We figure mandating Congress raise taxes will be a surefire way to keep Congress from messing with it.
Do we need to raise the age of return? Do we need other things, do you think? Would this be sufficient? Or do we need our energy policy? Does it have to be all in?
I think that we have avoided the need to raise retirement age. Whatever you say about it politically, it's really difficult to do that. But we take care of 85% of the unfunded accrued liability. We actually increase benefits for some, by the way. And so you have to do a little bit more for that 15%. There's little dials you can turn that make that up. And by the way, we've taken a very conservative estimate of the return on investment. So I think a future Congress might find that this strategy would end up covering the entirety of the shortfall.
We had just shifting gears, we had the FDA commissioner on. I wonder if you just listen to this and then comment, and if your fears are allayed at all about what's going on with the FDA.
The promise of the Secretary Kennedy is to let people know that vaccines will be available if people want them. You will be able to get a vaccine if you want them. So that's a decision between you and your doctor, and each individual insurance company has their own policy. Look, some insurance companies don't pay for important cancer treatments that for patients that I saw as a cancer surgeon. And so that is another entire issue that's unrelated to the FDA.
And obviously, you have had comments about the Secretary of RFK in terms of the answers he gave you and the current state of things at some of the panels with the CDC. Are you concerned at this point?
Absolutely need to emphasize the safety and the need for immunization. You can't keep America healthy. You can't make America healthy again unless you acknowledge the safety and the importance of immunization. Makari is right. FDA doesn't have anything to do with recommendations of vaccines. That's the ACIP and the CDC. But if the ACIP and the CDC do recommend them, then insurance companies are required to cover it. And for that middle-income family, and we're concerned about that middle-income family that wants to make sure their child is protected by immunization, then they need to know, the insurance company needs to know that they should cover that vaccine. By the way, I think Marty's doing a great job. I have incredible respect for Marty. And he's right, though, that's not an FDA decision as regards whether or not the insurance company should cover it or not.
Are we over-vaxxed? I mean, that's just what we're talking about. Do you think a teenager should be looking towards COVID shots every year for the next 60 years?
So that is a recommendation. That's not a mandate. And if that teenager has diabetes, I would strongly recommend it. And right. So yes, there is a risk-based approach on some of this. And others of it, like measles, we've got now more measles than we've had for decades. We've had 2 children die from measles in West Texas. And to the Secretary Kennedy's credit, he has subsequently said that people should get their measles vaccine, that it is safe. Kennedy has said this. And so we need to emphasize these vaccines are safe. You should get them. You can't make America healthy again unless you're up to date on your immunizations.
Senator Cassidy, Senator Dr. Cassidy, thank you for coming on this morning. We appreciate it.
Thanks, Joe.
Happy Friday. All right. Have a good weekend. Thanks.
Up next, incoming PGA Tour CEO Brian Roloff joins us for an exclusive interview. We'll talk sports streaming to the PGA's deal with, is it Live? And much more.
Live.
Obviously, I'm not a golf person at all. And then White House Budget Director Russell Vought says Jerome Powell has, quote, grossly mismanaged the Fed. He joins us to explain later this hour. Squawk Box will be right back.
FTC+.
Business Leaders Meeting in Sun Valley this week. Julia Warson is there and joins us with a very special guest. Julia, good morning.
Good morning, Melissa. That's right. I'm joined now by Brian Rolap, the incoming CEO of the PGA Tour. You start in a couple weeks, joining after 22 years at the NFL. What is your agenda as the incoming CEO of PGA? What are your goals?
Good question. It was good to be here. Thanks for having me. Look, I think the first goals, and I've had the opportunity to meet with partners and meet with a lot of players. The first goal is a bit to learn. I'm coming into this job with a blank sheet of paper. I think there's a lot of opportunity here, but I think I'm going to learn and listen to our partners, listen to our players, listen to all of our stakeholders. That's agenda item number one.
So you negotiated so many complex deals when you were at the NFL, really working on that move into streaming and international. Now the PGA has been dealing with a complex deal with LIV for 2 years now. There's been this agreement in principle for 2 years. What's going to happen with this LIV deal? Do you want it to happen? Will it happen?
Yeah, I think, look, there's been a lot of conversation about the LIV deal. And look, I should probably learn more about that before I speak on it. I haven't even officially started the job yet. But here's what I do know. When you work in the sports business, it's not that complicated. You need to think like a fan. And I think the fans have spoken that they want to see the best golfers play more often. I think that should be a goal for the sport in general. Now, as far as the LIV deal is specifically, it's a complex situation. It involves no less than 2 sovereign nations. There's been a lot of discussion. So I think, as I said, everything's a blank sheet of paper. We'll certainly approach that the same way. But there's also a lot of other work to do. I think the opportunity for the growth of the PGA Tour, the strength it's showing now, and the growth I think we can have with some increased innovation, I think that's going to be my primary focus.
President Trump has said that he wants to see LIV and the PGA together, and he also said he's been recently involved in the talks. Have you heard from him?
I have not. I have not talked to the president, but I think he's probably another example of a passionate golf fan who loves the sport, who wants to see the sport grow, and that's one reason why I took this job. In my old job, which I loved, I had the opportunity to look at a lot of different things, but golf, this opportunity was something that really caught my attention because of the underlying strength of the sport. It's a global game. It's growing by all measures, including participation. It has a strong tradition, at least over 100 years in this country and longer outside of this country. And I think all those elements with a passionate fan base mean it's poised for growth. So that's clearly going to be my focus. But I think his interest is just another indication of that as people feel passionate about the sport.
And what about the question of change, though? I think LIV is really interested in this idea of teams and taking a different approach to golf. Do you want to see the sport change the way that LIV does?
Well, I think the PGA Tour product is strong as it is. And I think if you look at the underlying viewership numbers, they've grown this year significantly. And one of the reasons why I took this job is I really studied that fan engagement. And if you look at a competitive round on a Sunday afternoon where they're pulling 3 to 4 million viewers, which puts it up is a large sports event. I think the product it's working, and I think the golf fans are voting with their remotes and with their mouses. They're watching what they want to watch. So I think we're definitely going to have a culture of innovation. And as I said, I wrote a fan letter at the beginning of when I took the job, and I said, look, we're going to honor golf's traditions, but we're not going to be overly bound by them. So wherever there's innovation, we're going to look at it.
Now, the PGA's deals run through 2029. You negotiated some lucrative, high-profile deals for the NFL. I know a lot of the partners you dealt with are here in Sun Valley, and a lot of them will be the folks you're negotiating with again. What would you like to see for the next round of media deals for the PGA? And do you envision embracing streaming the way you did at the NFL?
Yeah, I think, and this has been a good few days because I've been able, as I listen and learn more, to talk to a lot of the PGA Tour's partners. Listen, I think the good news on all of this is that when you look at media and it's fragmenting, everything you know and everything you talk a lot about here on air, the sports is still breaking through. And if you look at where audiences are being aggregated, despite fragmentation of media, it's been around sports. So I think when it comes to the PGA Tour, it's very early. We haven't thought about these new deals yet. We have time, but I know we're going to innovate and increase the attractiveness of the television events themselves. But also, we need to go where the fans are. And increasingly, the fans are spending their times in digital. And I imagine a big priority of mine as I get there is to increase our digital footprint in all sorts of ways. That could include the tour events themselves, but it also include everything in between the tour events and tell the stories of these golfers and tell the stories of the sport, which I think is underrepresented in media.
But what about this question of fragmentation? This is something that you dealt with at the NFL, wanting to go to where fans are, but also wanting to make sure that fans know where to find the games.
Yeah.
So are you concerned about the fragmentation of the media landscape? I mean, we've seen, the NFL games go onto so many different platforms, including, Peacock, CNBC's sister company, Netflix has Christmas Day games, Amazon, YouTube. So how do you think about spreading out your rights in a way that's been very successful for the NFL, but every year they've gained more viewers on those platforms as people figured out where they were going to watch?
Yeah, I think it's a balance. I think reach has traditionally meant for sports broadcast television. And if you look at the numbers, broadcast television still delivers significant audiences. And so I think as this ecosystem changes, I don't think linear is going away or specifically broadcast is going away. I think it'll be a very important component of whatever the media strategy is for any sport. I think when it comes to the streaming platforms, you're starting to see a bit of a shakeout. You're starting to see an aggregation around a few platforms that are able to assemble broadcast-like viewership for live events, and I think that will continue. I think it's not over who the winners or losers are, but I do believe that will shake out, and I do believe there'll be continued consolidation, and we'll get down to a few platforms that are scaled. But I think the headline is these streaming platforms are delivering broadcast-like numbers, and I think you see that. A lot of sports leagues are moving some of their packages into that direction, whether it's what the NFL did with Thursday Night Football or the NBA's new deal with Amazon. I think that'll continue to shake out. The good news about the PGA Tour, we have some time. The deals are up, as you mentioned, after 2030, and we'll sort of have the advantage of working with our current partners who are great, and as they put their effort into dealing with streaming, whether it's Paramount Plus or whether it's with Peacock and ESPN Plus. So I think as we continue to look at that, we'll be able to assess and make those decisions as we get closer to the expiration dates.
Joe, you want to jump in here?
Yeah, I think about this precious thing you're getting into here, Brian. I think about, just being on the edge of your seat. Ryder Cup, I don't know what you want to mean, but golf can be the greatest thing in the world. But then again, I'm not sure young viewers necessarily understand that immediately, or I don't know how you bring them in, and other great sports have had trouble. NBA, it's not guaranteed that it happens, but you've got something that it might be the most compelling sporting, the last round of the U.S. Open, whatever you want to tell. You got great stars like Scotty and Bryson and things like that. So maybe you should make the ball, you can move it out of a divot. Have you thought about that? Does that make sense? Why can't you move it out of a divot, Brian? Are we going to talk about that?
Listen, we're not going to talk about that because I don't have a view on that. But I will say, I agree with you, Joe. Every sport is chasing how do you get the younger viewer, how do you get the younger fan to spend more time. Here's the great thing about golf and what attracted me to this opportunity. If you look at the underlying participation numbers of golf, since COVID, there has been significant growth. And then you look at the demographics of that growth, it's a lot of young people, it's a lot of diverse people. And this is one of the only sports out there where the participation rate of people who watch the sport is really high. There's only 1 million high school football players in this country, but there are tens of millions of golfers and they feel passionate about it. So they're already touching the game in increasing amount, which is a huge advantage. But I think second, it's something Julia mentioned, the digital footprint has to increase. We all know that younger people are spending less and less time with linear television, and they're spending less and less time watching 3-hour events. The strategy of being on the right digital platforms with not only the event, but the non-event, and telling the stories like JJ and other people, that's going to be really, really important to grow.
Well, we'll leave it there. Certainly a lot of people here in Sun Valley passionate about golf. Thanks so much for joining us, Brian Rolap, and we'll have to have you back on once you officially start as CEO of the PGA Tour. Really appreciate it. Joe, back over to you.
Okay, thank you. We wish him well. Golf Channel, we wish him Godspeed. Up next, the White House ramping up pressure on Fed Chair Jay Powell. This time, Budget Director Russell Vought raising concerns about renovations at the institution's D.C. office. Think if we were the Fed, I'd make the greatest office. I'd have hot tubs in every
taco stands.
They have all. They can print as much money as they want. They should make a palace, Versailles. Let's look at the futures right now, down 279 points. Squawk Box will be right back.
Something may be cooking in the food service industry. Performance Food Group stock jumping in the pre-market. The move follows a Bloomberg report that the company has attracted takeover interest from U.S. Foods. Performance Food Group is one of the largest food and food service distribution companies in the U.S., serving restaurants, schools, hospitals, and other institutions, up almost 7% right now.
OMB Director Russ Vought is calling out Fed Chair Jay Powell, writing in an X post that Powell has grossly mismanaged the Fed. Russ Vought joins us now, and we'll talk about the more maybe wide-ranging issues in terms of monetary policy. Then we can get into. I said maybe if I could print money, Russ. You heard what I said. I might make Versailles. I mean, I'd have servants. I'd have. I don't think I could overspend on my facility, but we probably don't. We probably don't want that. But let's talk about that after we talk about monetary policy. You think that there are political reasons that Jay Powell and the Fed have not lowered interest rates yet?
Well, look, the president's been very clear. He's concerned with the tight policy that the chairman has had. He thinks he's generally been too late. That's our view. And we saw Chairman Powell, he was too late to recognize inflation, and now he's too late to lower rates. And the Fed has just mismanaged the institution. And we see that the extent to which they've been operating at losses for a number of years now is for the first time in their history. And then you just see a very practical example when you go to the nation's mall. You see the construction of this palace, in the words of one former official, upwards of $2.5 billion, massive cost overrun, and we want to make sure we have facts as to the largesse and the extent to which it's overrun, and the plans keep changing. The testimony that he has on the Hill keeps changing, And I think it just points to the fundamental mismanagement of the Fed under the chairman.
Right. Maybe. That just sounds kind of vindictive. And I'm not saying that, everybody's perfect in Washington, but if you're mad at the Fed for not lowering rates, then you start looking at their what they're trying to do with their headquarters. It just, I don't know whether that's a substantive, but here's what I worry about, Russ. Let's say you got a president who loves lower rates. I won't mention any names. Might have been like a real estate guy. It might have been someone who just really likes lower rates. If he had a complete dove that would follow everything he wanted in terms of interest rate policy, you criticize Powell for not raising rates, not recognizing inflation when he needed to recognize it. You're really asking for someone who's on permanently easy, who has that switch permanently on for lower rates, and you would have done even worse in handling inflation with policy like that a couple of years ago.
No, I don't think that's the case. I think the president has been a great prognosticator of where we should be in terms of rates. But this is a very simple debate today about what is going on in the national mall, what's going on with the Fed.
If President Trump was in office a couple of years ago when it was obvious that rates needed, you really think he would have said the Fed has to raise rates? I can't imagine the president ever saying. It's hard for any president to tell the Fed to raise rates. Remember what happened to the first Bush and Alan Greenspan? He blames Alan Greenspan for not being reelected because he was too tight with monetary policy.
The problem with Chairman Powell is he has been late at every turn. And I remember back during the Biden administration when we were seeing the warning signs. We were seeing the warning signs very early, potentially on this program, from people like Larry Summers. We knew the spending was out of control. We didn't have inflation under the Trump administration. We developed inflation as a country under the Biden administration because of the excess spending. And for a chairman not to be able to look at the warning signs, the dark storm clouds fiscally that were occurring, and to be ready, and they keep calling it transitory, and then once we have a new change of administration, we no longer have inflation, it's time to lower rates, you have a problem there. But again, this is about the largesse and the fact that he has systemically mismanaged the Fed, and that is evident by what we're seeing with regard to this monstrosity, this Palace of Versailles on the National Mall, in the words of a former Fed official.
Yeah, I thought I came up with that. But, I mean, I can still throw other things at you, Russ. At the same time, the administration is arguing, President, how great the economy is right now, and we're the hottest, country on earth, and everything else. That's usually not a time where you need interest rate cuts. And there will come a time, who knows from what, where maybe the economy does slow, and then you'd like some dry powder. You don't want to blow your wad before you need to do it if the economy's percolating. So, I kind of have some empathy for what the president's saying because I think maybe we're too restrictive at this point, and we'd like lower debt service on this huge debt that we have. But then again, I could make the argument that the economy is in fine shape, and this is not a time where you need to cut rates, especially if the inflation demon has not, has a stake driven into its heart.
Well, again, from an inflation perspective, we're not seeing that. The tariffs have not led to inflation as all the experts said that they would. We're cutting spending. We're reducing the deficit. The tariffs are bringing in incredible amounts of revenue, $3 trillion over 10 years and counting. With it, those are all figures that come from the pause from Liberation Day. So fiscally, we are very much on the mend. And our point is we want to see the benefits of a growing economy flow to all Americans. And I know that there are people who are still stuck in mortgages with high rates that they would love to be able to go to a lower level. I would love to see lower rates to be able to improve our fiscal situation. I want to see the Fed get back to not losing money every year so we can actually get remittances to the United States Treasury and improve our deficit. So look, at every step of the way, we have problems with regard to the management of the Fed. He's too late, and he's incredibly expensive with regard to his building project, and we're going to get to the bottom of that.
So would you have tweeted what you tweeted yesterday, Russell, if Jay Powell said, I'm on track, I'm on board for a cut at the July 30 meeting? I mean, is this completely motivated by your stance that he should be cutting rates and he should be more dovish?
The president is a builder. He's horrified by the notion of cost overruns. I go over to the Martin building fairly often in my role as CFPB director, and you see this largesse. You see the artwork in the Martin building. You see the extent to which they just have built and built with no consequence and no conscience with regard to the taxpayer. And now it's overrun, and you get the sense that they're talking about the gardens on the terrace, the waterworks outside, the private VIP elevators. This is wrong. The American people should deserve better from their public officials, and he's made comments that would suggest that they have changed the plan that the National Capital Planning Commission approved. He can't do that, and so we have new commissioners.
This has nothing to do with his stance on policy.
What's
nothing
that?
to do with it. If he were cutting rates, you would still call for this investigation.
This is about the extent to which this building is incredibly expensive and overrun, and we're going to be able to do what we can to deal with that kind of largesse that is offensive for anyone going to the National Mall. And that's the kind of thing that our National Capital Planning Commission...
on rates. Nothing to do with his stance on rates.
This certainly has to do with the fiscal mismanagement of the Fed, of which this is one aspect of it. And we are going to zoom in over the last several days on this. We have new commissioners at the National Capital Planning Commission who are asking very tough questions as recently as yesterday to see what is going on at the Fed right now with regard to this building. Is it in compliance with the plans that were approved? Should the plans be reconsidered? That's the debate that we'll be having over the next several weeks as our wonderful commissions do the hard work of their oversight activities. And we expect responses to the letter that I sent yesterday to the Fed.
Right, just in closing, do you think that President Trump really wants an independent Fed and an independent chairman of the Fed? And if so, if he really does want that, would there be a time, and I don't know what the circumstances would be, where interest rates needed to be raised for whatever reason, for inflation or whatever? And do you think the president would be okay with that at some point? Because it just seems like most presidents want lower rates because they want a strong economy.
Joe, that's not the debate that we're having. The debate that we're having is the president came to the office on behalf of the American people. And to the extent that the Fed has a lever with regard to the economy that it is not using that we think is appropriate, right. The president has a voice in that. And the president is articulating his viewpoint, his administration's viewpoint. It's totally appropriate. We're now articulating our view with regard to this building, and I only expect that to continue. But this is not kind of a metaphysical debate about the Fed. It's about, should the Fed lower rates on one hand, and in my lane with regard to this building, is this building largesse? Should it be overseen, and should it be potentially reconsidered at the Planning Commission?
Which which Kevin do you like? I'll end with that.
Those are all questions for the president. The president will make all those kinds of announcements at the appropriate time.
Okay. OMB Director Russ Vogt, thank you. Talking about Kevin Hassett, obviously, and Kevin Ward. I don't know whether they're the front runners. Scott Bessent's in the mix as well.
Up next, NVIDIA CEO Jensen Huang meeting with President Trump at the White House ahead of Huang's trip to China today. The chipmaker stock closing with a market cap above $4 trillion in yesterday's session. We'll talk about the stock's move and other chip names after this break. Squawk Box will be right back.
Back. No.
NVIDIA, the first publicly traded company to hit the $4 trillion market cap at yesterday's close, is down slightly this morning ahead of the opening. Joining us now for more on NVIDIA's rally and what is next for the chip sector, Stacey Raskin, Bernstein Senior U.S. Semiconductor Analyst. Stacey, great to see you.
Good to be here.
He made the trip to President Trump ahead of his trip to Asia to meet with Chinese officials. I'm wondering, how do you read that? Do you think he's still pressing his case for access to China, which they're effectively shut out of?
I mean, I'm sure he's pressing his case. Like, I think it has to, and they are shut out. And this is the negative and the positive. The negative, it is costing them many billions of dollars in lost opportunities. I think he said something like it could be $50 billion, and frankly, it's probably more, like, over the long term if the market is as big as we think it is. At the same time, they've also zeroed it out of their numbers. So to the extent that they can either, convince Trump to relax some of these constraints, or to the extent that they can work around them, lowering the performance below, like, the new thresholds, anything that they get in China going forward from here would be upside, because they have taken it completely out of the model.
So walk us through. I mean, if you are to take out those numbers, fine, like you can take out the numbers now, but there is sort of this bigger compounded impact in the future. For every chip they don't sell, Huawei selling that chip instead, and that gets compounded even more and more and more. So how do we think about NVIDIA at a $4 trillion market cap and going higher probably, but without the China growth story? Where does that growth get replaced?
Yeah, I mean, you bet, and it's fortunately the market is probably big enough where they can still grow really well even without China. However, it's not like that China business would get back. And I made that point, on this channel. With the nature of the new constraints, effectively you are handing the Chinese AI market over to Huawei if NVIDIA is not allowed to sell there. I mean, Huawei has parts. They're not as good as NVIDIA's. They don't have the ecosystem. Even with the lower performance of the NVIDIA parts, given the thresholds, the Chinese customers would still rather use them because of those ecosystem benefits. If you're completely banning them, you're encouraging, not only you're driving sales to Huawei, but you're also encouraging local customers to start to invest in that Huawei ecosystem, and it strengthens it. So these are not good things. The longer term worry would be, does Huawei start to build that ecosystem and then try to sell the stuff out of China? Like that would be bad. And so again, Jensen was very clear. Actually, he spent a lot of time 3 months ago or 2 months ago in the last earnings call laying all of this out explicitly. I'm assuming he was giving the message to the administration. So yeah, I think the market's plenty big enough for them to grow. But I mean, it's unfortunate if they're not allowed to sell into China. That is a market that's big, and they wouldn't be able to replace it there. Fortunately for them, though, especially in the near term, when they guided, they dropped $8 billion out from China. Right. And their numbers were still fine. It just kind of gives you an idea for how big the overall market and opportunity is for them.
I'll ask quick question, Stacey, and that is, in terms of within the sector, within your coverage universe, is it time to start rotating into some of the more undervalued chip names, or is that still too early? We are seeing sort of this churn, and we're seeing the non-AI chips, Texas Instruments, Intel, they're starting to gain here.
A little bit. Now, I wouldn't necessarily call the non-AI semis undervalued. Right. You mentioned Texas Instruments. I mean, I don't know where it is, 36 times earnings or whatever. I think TI may be the most expensive stock in my coverage. However,
let's say.
Yeah, but there are, there are people that are playing like cyclical recovery in some of these things, like TI and some of the other analogs. And it does look like we're seeing some cyclical recovery now. Whether that's real cyclical recovery or just inventory stocking or just tariff pull forward, we don't know. But there has been a play to go in there. I personally still do prefer the AI names. I still like NVIDIA. I think, again, with China sort of zeroed out and the Blackwell supply constraints kind of eased, I think things look pretty good in there, especially into year end. And the NVIDIA's valuation right now is not aggressive at all. I think it's, mid to upper 20s on next 12-month earnings. It's very inexpensive if you believe the number.
Stacey, great to see you. Thank you. Stacey Raskin, Bernstein. Up next, a check on this morning's pre-market movers. Squawk Box will be right back.
happy with it.
Let's get to Frank Holland with a look at some morning movers. Hey, Frank.
Hey there, Joe. Let's start with an earnings mover right here. We got Levi Strauss. Shares up over 8.5% right now following earnings. The company stitched together top and bottom line beats in earnings yesterday. Guidance really the major story here. Levi upped its full year EPS guidance from 120 to 125 per share to 125 to 130 per share. However, that does assume a 30% tariff on China and 10% tariff on the rest of the world. The Levi Strauss CFO told CNBC that Levi sources many products from Indonesia and Bangladesh, both of which were recently threatened with tariffs north of 30% by President Trump. But as of right now, Levi shares up over 8.5%. Also, a look at NVIDIA, currently trading just a scooch below that $4 trillion market cap level. It became the first company to close above $4 trillion yesterday. You see right here, shares are pulling back just about 0.5% in the pre-market. Again, just a scooch below that $4 trillion mark. And also, it's worth keeping an eye on today. We're talking Bitcoin, of course, had a major rally over the last 24 hours. Now just very slightly off the record high it reached earlier. Right now, Bitcoin up about 4%, trading at about $117,925 a coin. Tanaya Michio on our show earlier today said a short squeeze is a big reason behind the rally. Continue to keep a watch on it throughout the weekend. Again, Bitcoin up just about 4%. Back over to you.
Really moves around up and down, but mostly up recently. Frank, thank you.
Thank you.
I'll see you at some point next week. Is that true?
That's true.
Okay, but not on Monday.
Back.
Not on Monday, but you
Definitely
will
not
be
on
back.
Monday.
That's like that's what we try to do to bring viewers back. Did I thank Frank? Frank, thank you. Someone tell him I said that. Make sure you join us on Monday. You'll be here Friday. I know that already. Squawk on the Street is next.
Good Friday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber, and Post 9 of the New York Stock Exchange. Futures a bit weak, coming off all-time highs, though, as the White House adds to a week of tariff threats and markets look ahead to next week's bank earnings and inflation data. Our roadmap begins with this renewed tariff uncertainty weighing on the street. The president does announce a 35% tariff on Canada and threatens higher tariffs across the board.
Plus, the White House continues to up the pressure on Fed Chair Powell. We'll discuss that. And shares of Levi Strauss, they're surging ahead of the open. The company raised its sales guidance and says it will absorb tariff costs, at least for now.
Let's begin with the president threatening to impose 35% tariffs on some imports from Canada effective August 1st. He outlined that move in a letter to that country's Prime Minister, Mark Carney. For now, Canadian goods that are compliant with the USMCA agreement would be exempt. Carney responded late last night in a post on X about the trade talks, saying his government will continue to defend Canada's workers and businesses and work towards, in his words, the revised deadline of August 1st. Again, Jim, if we were overreacting to this kind of stuff in April, are we underreacting now?
Well, I just think that we've got this situation mentioned in the nightly news report where he just said, look, the market doesn't mind. It does seem like you've got some sort of Treasury best and put here. The president waits, the market's all the way up. The president then whams Canada. And I got to tell you, Carney obviously not a fan favorite there in the White House. Very left wing. People feel that Carney, you read Carney's books, he's left wing, but the fact is, David, the president, when he's riding high, meaning the market, he really tends to lash out in a way that I think we're not used to.
Yeah, it's sort of surprising. I mean, let's just take this week. So copper, 50%, and we discussed that yesterday, and you went through a lot of the math that was interesting, but the fact remains that we don't produce domestically enough to satisfy domestic demand.
700
and it's
billion.
an important part of a lot of different things that are important to the economy. It's going to raise costs. Brazil, a politically motivated potential tariff there of 50%, where we have a trade surplus, interestingly, with the country. And now Canada going up from 25 to 35 again, as Carl mentioned, though, only on things that are not part of the
That's
USMCA.
important. We don't know how much really now.
Right. But let's step back for a moment, because the overall tariff rate is somewhere approaching, what, 15% now, Carl? Something along those lines, the likes of which we haven't seen in this country in a century.
No. And J.P. Morgan all week long has said the closer we get to 20 and above, the more we get to what they're calling boiling the frog.
Well, look, you've got the spoon hauling. We're already in excess of that, which is the ones right. A lot of people feel that has a lot to do with the Great Depression. I come back and say these are all negotiable. and I don't believe that the final ones. I think they can come down. I write the Mad Money with my. I have one writer. He's also my head writer, Cliff Mason.
Yes, your nephew.
My sister's kid. And he points out to me, he said, Jim, being a little politically naive here. In the old days, when we were short of copper, the CIA caused a coup, and we put a right-wing guy in, and that's how we got our copper. That maybe the 50% tariff is a little bit more light-handed than the old days.
Yeah, except that, right, that was Chile, for example.
Right, well, so in
thinking
Kinshasa,
okay, and we still import a lot from Chile and Mexico, but there are trading partners.
I'm saying this isn't more.
We have free trade agreements, or we used to with those
but I'm
countries.
saying that maybe this is more civil than we say historically.
But why are we doing it at all?
No, because copper is hard to come by all of a sudden, and because we have 7 smelters we closed because of
That's not
David
the reason why we're putting
despoiling
50%
the
tariffs.
environment.
That's not.
No, because then maybe you'll start. There are already people are talking about restarting smelters and going in and starting to dig copper. And the gold companies have a ratio of how much copper they produce, and they can switch that.
It's not like we're taking our copper from China, where you would be worried. It's currently allies, at least what used to be allies of the United States.
Well, 60% of copper goes to China. What used to be 60% went to us, and 30% went to China. Now
No, China makes a lot.
Yeah, no,
We get 3/4 of our imported copper from Canada, Mexico, Peru, and Chile.
Right. And I just think that I think that there's a big problem, and that is that the data center, somehow, they want to try to run it on glass, and they can't. It's run on copper. And, David, there's a electric vehicle company that's important in the country, and it consumes a huge amount of copper.
Yes, I'm sure it does. I'm sure Tesla does. But I'm looking at Peter Bookvar's note. Again, back to the broader issue of baseline tariffs of 15 to 20% of 3.3 trillion of goods that are imported into this country. It's it's $500 billion.
It's 15% of the economy.
It's $500 billion a year, either being paid for by companies as a tax or the consumer.
Well, look, we saw it last night. Michelle Goss told me at Levi, look, we're going to be able to overcome it because they have price. They can take price because Levi's a great brand. What I overlooked was that ConAgra, which does not have great brands historically, had to eat the tariff on tin cans, and their inflation rate is going to be 7%, and that's why that stock got so many different price target cuts. So some guys can handle it. But tin cans going to be big. These are
they talked about a decline in consumer sentiment during the fourth quarter as well. This is ConAgra, cumulative impact of persistent inflation and rising interest rates, overall economic uncertainty.
Right, no, that was a call which just said, look out for next week's CPI. It's going to be bad.
We're going to get CPI and PPI, and that'll feed into PCE. You think can we get away with another tame print? This would be like 5 in a row.
I think we'll be okay. I think we'll be okay.
Because
I just don't think. I think that there's a lot of other forces at work right now. I'm talking about this in my club speech today. There's a man, and that man met with the president yesterday, Jensen Huang. And what he stands for is 2 things: accelerated computing and generative, which is incredibly deflationary. It's not in the numbers yet, but you want to see something in the numbers, David, you go and see the Norwegian robots.
Go see what am I seeing?
The Norwegian robots.
Oh, the Norwegian robots.
Yeah, the Norwegian robots.
Okay, I just didn't know.
The Norwegian robots at the Stanford Robotics too. You go see those robots. I've got to tell you, Andy Jassy told me maybe 2030. But these are the most deflationary things I've ever seen because they can make your bed, they can put the dishes away. They save a lot of marriages, by the way.
Wait, do I have to go to Norway to see the Norwegian robots?
No, they're going to be exported here. No, you don't.
I'm just wondering.
It's going to be a worldwide. He's laughing. He's laughing. He'll be the first to order one. He'll be the first to order a Norwegian robot.
Your broader point, though, is there are so many deflationary forces at work.
It's just
that the president has a runway to do as many tariffs as he likes.
I don't think he realizes it, but yes. I'm not sure how close he is to what Jensen's doing.
I'm still stuck on these Norwegian robots. I don't know about you, Carl. What do they look like?
IX.
Are they?
I'm so glad you asked me that.
Are they blonde?
Did you set me up for this? Did you set me up
and
for
they
this?
climb mountains very easily? I've been to Norway, by the way.
On a different era, yes.
I spent a week in Narvik.
It's not about Norway, okay? Yeah, I remember that. Narvik, you brought down that school district. I remember you did that. The point of it is that Jensen has said, robots have to be exactly like people, because when you ask them to do tasks, they have to know like where they have to put the dishes away. They have to be like a human. So the robots that I saw even have human faces. They're very scary, very Rod Serling. But I've got to tell you, we're all going to have one. We're going to rent them first, except for the oligarchs. They're going to own as many as possible. The fact that this is actually true is quite scary. But they're replacing people. Now, maybe you can always say, well, people are going to go do something else. Jensen would tell you that because they're low birth rate and no immigration, these are a savior. But I can tell you that the deflation that's coming from the robots and from the computer programs, it just, tin can on the one hand, wages. We are going to be in a deflationary spiral, David, that you're going to fight to get out of.
Sound like
nobody's going to have a job either, though. So
no, they'll be.
So
there'll
then
be jobs,
there's that
just the
offsetting
jobs
it.
may not pay as much as the current jobs.
Well, that sounds good.
What do you do with a person who's a third-year legal associate at Paul Weiss? What does that person do after Paul Weiss?
You're kind of painting a dystopian future with a bunch of robots running around and people not having jobs, nothing to do.
I'm sorry to give you a
but there'll be deflation.
Yes.
And not only that, David, they're Norwegian robots.
Which is, they've already got a sovereign fund, the
we
likes
have-
of which the world is no one larger, so
That's
they're all
one of
good.
the-
There's only 6 million Norwegians.
GTC, they showed you these robots, and I asked the robots to do certain things. The robots were very compliant. They'll do what you want. Maybe that's a Scandinavian thing.
I think we're a long way from the robots, Carl.
Yes, 3 years.
3 years.
Jassy says 4. I say 3.
This is when the oligarchs own them.
The oligarchs are buyers, and the rest of us are renters.
We're going to rent them.
We're going to rent. Oligarchs get to buy.
Meantime, JP Morgan Chase's Jamie Dimon speaking out about the investment backdrop right now. Some comments yesterday about tariffs and rates. He said in an event in Dublin that he sees complacency in the markets and that they should not rule out the possibility of higher rates, adding, quote, the market is pricing a 20% chance. I would price in a 40 to 50% chance, Jim, of higher rates.
Nobody ever remembers when he's wrong. He's been so. I remember when a branch he opened in Philadelphia, and he was coming with some sky high rate. But who cares? Had it gone up, we would all said he was a genius, but it didn't. Now, I think the more important thing was that he basically called the Europeans a bunch of suckers. He said, "You guys don't have any dynamism." I thought that was more important. I know that everyone's going to focus on this, and I get that, the complacency. But I thought he took it to the Europeans, right in front of the Europeans' faces, David. Did you see that, what he said?
Yeah.
Well, what'd you think of that?
You're losing.
You're losing. He called them a bunch of losers.
Yeah, you're losing. Europe has gone from 90% U.S. GDP to 65% over 10 or 15 years. That's not good.
No.
True.
I know, but that was devastating. He goes right to it in their faces.
Well, he's never been one to mince words. To your point, by the way, when it comes to predictions,
he's been just okay.
Yeah.
He's been just okay.
I mean, there was a time where he refused to even talk about Bitcoin,
right?
Which now outpaces a 10-year gain of Nvidia, Amazon, Netflix,
He
Tesla.
may have gotten that wrong. He may have gotten Bitcoin wrong. The thing he's gotten right is he's been the CEO since 2006.
What he's gotten right is that JP Morgan's got an $800 billion market
What he's got right is that next week
and that's what
they're
shareholders
gonna-
care
they're gonna
about. When it comes to his predictions, I'm always happy to listen, because how can you not listen? And by the way, it's always refreshing because he actually speaks his mind in a way that many CEOs are incapable of doing.
He does.
That said,
He does.
he's not right a lot.
Okay, so David, there's another bank.
Yeah.
European bank, not a loser.
Banco Santander.
Woman used to run.
Yes.
He's a very important person, JP Morgan. Banco Santander on the boutique. Stock's up 88%. Jamie's is up 20%. Which would you rather own?
Well, I will, again, this is the part in the show where I, for a moment, praise you. Because you have been, and I don't even think our viewers can find a clip of you where you haven't said something positive.
Do you know
about
how long it took
Santander.
for me to try to find something where you ridiculed me for NVIDIA? And I really couldn't find it. Which just shows you that we have no AI.
Because I rarely, if ever, ridiculed you.
Kramer, and like 10 things came up, but not NVIDIA.
No, not exactly. I know, because I think that was a false narrative you were pushing.
Counterfactual?
That said, you've been consistently positive on Santander. You continue to be?
Yes.
Even with the stock up almost 90%?
Because she's reinvented the bank. She just went really big into UK. She's making these small acquisitions. Look, it's a $127 billion market cap. It dominates in all parts of Latin America. No one talks about it. It's been a huge home run, and you get a great yield. And I just think that Spain, and she would tell you that Spain's not necessarily the most capitalist of countries, but I don't think she's a loser. I think Jamie Dimon should have asterisked it.
We've talked a lot about European banks as a group outpacing Mag 7 last couple of years, Jim.
Yeah.
I mean, so is Jamie about sour grapes? What do you think?
I think that Jamie wants to be off the cuff, which is delightful, but I think that you can't make that sweeping comment about Europe anymore. They're not losers. They got winners.
Well, we all know their stock market has obviously been a winner.
Yes, it
this
has.
year. We talked a lot about Germany's decision to increase defense spending,
Yes.
what that could mean for
These
the
don't sound like losing things to me.
You know what the best country ETF is year to date? Greece. 50,
What a comeback.
55%.
Good piece in the FT about the Greece comeback. I see a lot of people visiting Greece now. It's like, become.
Remember the European debt crisis? Corzine was so right, and he got blown out because of that Ian Jones thing.
Darn pigs.
MFS. Remember that?
Yeah.
I love.
And he would have nailed it. He owned it all.
Ran out of time.
Ran out of time.
But I would tell you that the comeback in these countries is extraordinary, and I didn't think that his comments about being losers was apropos of anything, given how strong their markets have been. Now, I do think, by the way, that the strength of the markets versus ours may be peaking, but that I would have used that comment like a couple of years ago. But right now, I would have said, you know what, you guys, winners.
Right.
I would have not used the term losers. I would say winners.
The president sees that. He's like, we're going to put more tariffs on you until your stock market performs less.
That could be,
as not as good as ours.
That could be. Yeah. Well, it's like the Canadians. Remember, they were trying to put a tariff on intellectual property and tech. The president doesn't like that. Do you remember we had Peter Navarro on? We talked about how they're fighting those tariffs. You know, the old honey
digital
pot.
services tariff. Yeah, it would have been. That was a big one, and Canada removed it.
Yeah, but
although they still now are facing, back to the beginning of our show, 10% more on everything other than what's covered on the USMCA.
That was a slap in the face of the president.
But they removed it.
Doesn't matter. The intent was there.
Meantime, I got some Fed speak yesterday, Jim, from Waller and Daly about whether or not we're going to get passed through from these tariffs into. There's a lot of dovish commentary out of the Fed this week.
Look, I think it's going to be not as bad as people think, but that's because of offsets. Like, for instance, the Saudis putting out another 700,000 barrels more than we thought. So I think we're going to see gasoline come down pretty dramatically. I know that the Costco's and the Walmarts are ready for food inflation, and I don't know if you guys have been. There's a vast national shopping experience going on right now in this country that is reaching its conclusion. But Amazon Prime. And I've got to tell you, I bought Diet Coke, I bought Gatorade, I bought shoes, I bought backpacks. What are you looking at?
I'm not looking at anything.
I'm just saying that you want inflation, I give you jassy deflation. I think these prices were good. But look, people shop. It's what people do.
So you don't believe these 40% down Prime statistics we've been getting all
Go
week?
to Amazon Prime, you get anything you want. I got a 2-for-1 deal on wingtips, I couldn't believe it.
That's at least 4 or 5 wingtip references on Prime this week from you.
No, I told Jassy. And you know what Jassy said?
No, I don't.
He said I crushed it.
Really?
Yeah.
Okay.
CEO Amazon said I crushed it on Prime.
Congratulations, Jim. Futures are a little weak here. We actually got some price target increases on Amazon today. We'll get to that out of Morgan Stanley. Futures remain in the red on this Friday. Don't go anywhere.
Good morning, retail traders. Morning, retail traders. Did I get both my waters? I thought I had both my water. What the? Okay. I'm sure I brought them both in.
It's been a busy week of all-time highs, whether that's Bitcoin, the NASDAQ, NVIDIA. Futures soft today, but the NASDAQ is trying to eke out a fourth up week in a row. And the S&P managed that all-time high, I think, up for the week by about a point. We'll get Kramer's Mad Dash and countdown to the opening bell after this.
Smells real good down there. Okay, I'm here. At last.
Welcome back. Time for a Friday version of the Mad Dash, for which we are standing. Nice. All right, let's talk one of the biggest companies that is out there, Amazon.
You know, I want to go away from the Amazon Prime. A lot of people are saying it's good luck with it. It was an excellent piece today by Morgan Stanley, but it's not about Prime. It's not about retail. It's about Amazon Web Services, which you have long reminded me is really where the money is.
Well, the margins there are incredible.
Right, and advertising too. But and what I thought was interesting was they were saying that Azure's got good numbers. That could be an harbinger for Amazon's numbers. But they said the latest CIO survey shows that Amazon is gaining over Microsoft, Google, and Oracle. And then they even say, now I don't know how important this really is, but that non-Anthropic AWS growth speaks to the strength of business, and Anthropic growth is going to be good. Now, Anthropic, they have a stake in. But David, what they're basically saying is that the part that you really should be concerned about is not web service, it's web services, and web services is going to be better. And because of that, then you really are looking at lower estimates,
right?
And they can beat those estimates. And I thought I was going to talk about the same thing we feel about Netflix next week. There's this an overwhelming sense that the estimates got too low, and I thought that was interesting because this is the one that I think a lot of people say, well, you know what, Jassy hasn't done as well as the other guys, and now, of course, now people say Tim Cook hasn't done as well. I mean, give me a break. There have been some unbelievable people like Jensen, hard to keep track of, but I think Jassy's doing well, and I think that Web Services is really doing well.
Right.
Well, I think you need to shut your mouth, Jim Cramer. Okay, well, let's see what happens. I don't know if I want to be in a hurry or get this dip right open. We got a triple bottom on the 30-minute tweezer bottom with a doji, so we could have a breakout. We have had two of them. This one went on for 2 hours. This went on for an hour and a half. On the /ES. So we'll see here at open. I might just go ahead and jump right in them and do a fast scalp. I was asked earlier if SPY had a megaphone. We have a fallen wedge on the 1 minute. Fallen wedge on the 2 minute. Fallen wedge on the 3 minute. Fallen wedge on the 5 minute. So we should have a breakout today. Good morning, Robert. On YouTubers. We got 2 minutes left, enough time to take off my shoes and have a sip of coffee. Yeah, it's going to be humid summer. It's already sticky out there. I'll probably go sit by the pool here. I like to get that water warm where I might go out and lay out in the sun for a half hour today at lunch. We ain't had much sun. It's been rain, frickin' rain every frickin' weekend. Okay. I should run and get me some creamer. Everybody can hear me okay? What are those lower and upper bands, Jimmy, on what? Okay, here we go. The 624s, dadgummit, I knew I missed it. Is that a buck? I wasn't paying attention. I was going to jump right in that thing. Let's see if we can get something here. We're at a double top. Come on, dip. Send the alert off the VWAP. Oh yeah, that's pretty good support actually. Right here at 622.83. $0.87. Get ready. Prepare ye in the name of the Lord. Now I thought I set an alert on this sucker. I really did. I just thought I set one. Okay, here it is. Right now. 81 cents. 82. Off the VWAP. SPY at 82 cents. We don't know if it's going to work. We could hit the 200. Dang, look at SPX. That looks sexy too. Let's get it. .69. $82 and 69. They're at 15. A little risky. And watch the SPX here too. I got 74 cents average. SPX 11th. $62.60s. Meta's down 11.69. Whoa, watch Meta. Meta won't tweet pay. Let's break it. Come on, baby. Watch SPX here, see if we hold this orb. Now what's NVIDIA doing? Apple 210. We have a breakout on NVIDIA again, 165. AMD was being pumped yesterday, it's pulled back. And we got Meta. I really like Meta. What was that one I took yesterday? It was Meta, wasn't it? Yep. That's one I should have held. Nile 370. Zoom at 74. So they're pumping Amazon. Come on, you stupid stock. Shit. Didn't hold. There's something. Oh, Funk's back.
Look for pre-market low. It's 62.76.
Welcome back. I have 621.88 next. And that's on the hour. That's, I don't know. I don't know if I got that on the hour, but 620.83 is the 200 on the hour. What, I go to 30-minute? That might help out. Yeah, it's definitely a 30-minute. We're at a head and shoulders on Meta. Tesla can drop. We're back to the orb on the SPX on the 1 minute. We did touch it on the last minute off a wick, right on it. Well, I mean, that's probably how it got it. Here it is again. These are now at 510, the 6260s. 490. Oh, didn't hold. I'm gonna have to load up big time, I think. We got a falling wedge. We can drop more on the ES. And we got a double bottom here at 62.80.11. Right there. What is this? LMFA. Ooh. Strauss shares. Oh, Levi had good earnings. Levi's what? LEVI. Well, shoot.
You're almost there. 62.78 is probably around 0.5.
62.70.
Yeah, pre-market low is 62.76.75. Pre-market low is pretty stout as far as reversals.
Yeah, right around 77.52.
You have 125 orders sitting at 62.80.
Yeah, I like a 62.80 area. On the 30-minute.
Yeah, one more minute for this 5-minute candle to roll over. If this tweezer bottom will go in.
$6.24 at 50 cents. So now, I got 50 cents added on there.
15 seconds.
That's a good average down there. We could drop more. I mean, we could hit 619.80 on the SPY. Just continue on down. Now, so we've got a triple bottom here on /ES coming up. So let's see what happens, Funk. 627.
Let me know when it hits that level I called out, because my freaking platform just crashed.
What, 77?
Mm-hmm. Walked by through my phone.
Okay, we're about there. We hit 78.46. Now I'm going to give you some good advice. If you're having issues, I would probably just hesitate with your technical stuff.
Mouse is down completely. Can't even get it into it on my phone.
Yep. Just take a break.
I was waiting for that setup all freaking morning. It's so freaking. Oh my god. If it bounces at that level, I'm going to literally throw this every time. I'll set myself on fire.
Yeah, don't do that. Now watch the SPX here. We're still bearish. We're under the 9, but Mr. There we go. Mister's had a double bottom, higher low. I'm not ready yet. And the video is the one I should have been watching. There, I'm even now on my SPY. Big. Now.
It bounced there, didn't it?
Yep. Calm down. Ain't gonna do you no good. Okay, I got an average of 62. We got 3 white soldiers, so you know what that means. So I'm going to scale out right here. There it is. Out at 72 cents. He hears me now. What was the deal there, Sheba? I got a little bit left, but we'll see here. We got a double, triple top coming up. Now I used the cloud on this one Plus I had that pivot point that I called out this morning at 621.88. And then I forgot what I looked at to get that slash ES. The 30-minute. We had 4 candles this morning for 2 hours holding that support. Now on the half hour you're at the 200, so again you're sitting here for a couple hours, 1, 2, 3 hours, needing to break that 200 EMA. So if that breaks, that's a good catalyst to run it back up to the 50, back to 63.06. If it breaks, and I'm going to set an alert to let me know if it does break. The way I set that is at the mark at or above Tesla reversed.
Need medication.
There's a dispensary down the street.
Sorry about it.
Look at that in the video.
That was literally the reason I knew Post was down because I was clicking the button.
Yeah. BTCS. That's that Bitcoin stock. Oh boy, that was a miss. 150%. 2 weeks. Should have went to that one when that Bitcoin started running. We're at the VWAP on the slash ES on the 1 minute, or any minute, doesn't matter. Okay, SPY needs to break the 21 to go, or that's the SPX, is at the squeezing between the 9 and the 21 EMA. So if we get a pullback here, we take the double bottom, and if we get a breakout, we take it and run it up to the top of the orb, the 62.56. But we got to break it. I don't think I'd jump in here unless you knew the risk. The 6260s, Jimmy called out at 490. They're now at 740. SPXs, and you're at the VWAP, so I'd take some, at the ES, I'd take some profit off the table. 770. Do it. July 11th. Excuse me. Oh boy. That was very unprofessional. $8.10. Jesus.
Calls coming in. You got liquidity at 6,300.
We got a triple top coming up here, Funk. On SPY.
Yeah, if you look at ES, liquidity is sitting right at the top of the board.
We're getting there. So on the 1 minute, we did hit the triple top on the SPY right now. Okay. Good morning, room. Livid Goose, did you get in or out? Richard? You're holding?
I didn't get it, but I've seen more calls on Tenderflow. My book mat says the liquidity is at 6,300, which lines up where the top of the orb is.
Yeah,
top of the orb is 6,300. I would say 62.99 start cutting.
Yeah, that's a 63 EMA on the 30-minute. And the 200 on the 5-minute EMA. And the only thing you got on the 1 minute is your 62.98. 50. So I'm going to set an alert on the 5-minute off this, well, I don't know. I think I'll just watch it. Yeah, it'd have to be 62.90. You just hold it right there.
Still got calls coming in. Looking at this green, like CBD, so the cumulative volume of the map is still green. Flash sale. Have to check that out. Baja Principal Hotel and Resort flash sale up to 50% off. The video looking real good today. We're holding that triple top on the SPY. AMD's been flagging out here. We got a symmetrical pennant flag on AMD. You know, it could still be overbought, but we got an ascending triangle on Meta. Double bottom, high or low, snake breakout, pull back into an ascending triangle. And Apple did bounce off that dip I called this morning. Slash ES yet to break the 63 on the half hour or the 200 on the 5. We got a double bottom on IWM. Snake breakout pullback to the 200. So back down to 220.40 is where I might trade IWM today. See if we get double bottom here. Higher low, double bottom. Actually, I need to raise that up just a little bit to that place right there. Right there. SPX at the 21. These things are. And I'm out of mid 810. I'm going to put the Fibonacci's on the video here. Set the alert right above that 38% pullback. Looks like I missed it. They're pumping Netflix again. I just think it's still overpumped. But I'm not a Hollywood guy either. That girl asked me yesterday, you like to go to the movies? And I said, no, not really. I'd rather make them. So the SPX hit the top of the orb. Slash ES is pulled back to the VWAP here. This is a yin yang double bottom after a double top break. Or a triple top. So we'll find out if we're bullish or bearish from here, right here. I am going to look at these calls and see where they are. 740. Go down a notch. Well, not really. Go down to 62.75. Or 62.70. $62.70. $3.70. $3.70. This might be risky too, but off the 21. Yeah, off the 21. So this is the 9 crosses the 21. So as long as we stay above the 21 now, these are at 450. So you're coming up to a triple top. You're at the orb, so you either take out, get out now, or see if we break. Because you're at the orb, right? 460. What the heck is that? So it's a triple top. 1 bits, 2 bits, 3B. If we break, we got the 63 right here. And we got a double top, triple top on the /ES. So either take profit but we're above the VWAP, which is a bullish indicator, so you can use that as a stop. Now this is a megaphone. There we go. $5. Yeah. So I'm going to scale 2 out at 490. 480. 490, come on. We're at the 63, so I mean, you got to make some kind of decision here. 490. I'm done. Dadgum. They're at 520 now. Can't believe that doctor. I keep thinking about that doctor playing with my belly. I think I was sexually harassed. Well, North Carolina's getting flash floods now. I tell you, it's not a normal year for rain. I mean, I'm an outdoor guy. I know what rain is. But when you get it every frickin' day for almost a half a year, Double top on NVIDIA. Never did go back to my support. Man, these things are 92 cents. I left quite a bit of money on the table there. $600. Okay. What's next? AVGO. Mr. bounced off the double bottom Jimmy mentioned this morning. Okay. Whoops. I don't know, I find this hard to believe. World record watermelon grown in Branson, Missouri. 857 pounds. I mean, look how big that thing is. There's no way that thing grew that big. £857 watermelon. It's perfect.
Well, it's pretty good recovery. Good eye on that there, Funky. The 6270s are now at $6. Off the VWAP here. I'll be right back. I gotta get my, I don't know, this coffee a little bit too strong today. Go make me a tea real fast and then go get another salad. I like that Cobb salad. I'd have made a fortune on that SPY if I held it. We got 62, 69, 16, Richard. $200 EMA. Clear path ahead, he says. Baba at 106. Pot stocks have pulled back a little bit. Kroger had that good run, what, a couple weeks ago, or off earnings, and that was back on 620. Then just broke out, then pulled back, and then broke out a little bit. I don't know. I'll wait. Kroger. I'm gonna put that on here. I don't trade it much, but I'll put it on just for fun of it. Oh, PLTR. Dadgummit. Here's another one I missed today. Yesterday I called 145.49 next resistance on PLTR. I think it 130.43 something yesterday is what I mentioned. So what was resistance will now become support. Yeah. Okay, I'll be right back.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how.
Oh, there it is. I had 142.78 yesterday.
And access support by phone, email, and in-platform chat. Trade brilliantly.
I was going to play that pullback, and I don't think I did.
World Nation, it's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from
Little pullback in tech. SPY just keeps going here. Okay, we're coming back a little bit. The 63 was the last, and the 21. The 21, so we hit that there, and we used a resistance there, and we broke below it. So the 63 right here, I'm going to be looking at these right now. These are the 6270s.
Watch for a retest of the board on the S, Jimmy. 6298.
Yep.
245 orders sitting there. That's where your heat map is showing the most liquidity.
Okay. What number was that again?
6298, 6299.
I got these at 540 for right now, one of them. Off the 63. Now we've had a pretty good run on this too, so this has to break or we get back down to, what was that number again?
6298, 6299. $62.99 studio.
After this trade, I'll go get something to eat. Been up since 1. I got these at 540. Did I post them in the room? It's kind of a risky trade. We're even again. I should have got me more down there, but I didn't. You meant ES? Oh, yeah.
You're setting up 3 Black Crows on the 5. What I'd like to see on the ES is 3 Black Crows to the orb.
Right now in the 2 minute, we're at support. And if it doesn't hold, it could be a pretty good drop to 95 on this ES on the 2 minute. But right now we're squeezing. And then on the 30 minute, you got a hard resistance at the 50 SMA that's been hit twice now. So we're at a pivot. Well, we were. We could drop another $5 here. But then on 1 minute, we're at the orb and on the 63, so that could be a solid support. And that's your 6,300 area, 6,399.
Yeah, I got my hand on the button right now. I'm just waiting for it to touch my orb.
That's on the 1 minute.
Yeah, I'm watching the 5 minute because it's setting up for 3 Black Crows.
And you're off the 200 on the 5. Which is
another 3.5 minutes till it closes. If it tweezers bottoms from the orb, I'm definitely taking it.
you got tweezer bottom on the 1 minute. Well, it did in a way. We'll see if we hold this support. I'll add 2 more right here. Now.
Yeah, don't like that we still have 2 minutes left on the candle. But it's at my support.
Yep, 410. Right off my support too. On the SPX. And that is a triple top support. One, two, three, boom, pullback. Blanket. It's tempting to go just get some burger and cook me some of my old burgers. So we're at $5 now. So this here, I'm going to show you this trade, this support level right here. You've got a triple top. You got one, the body there, the body there, and the body there with a triple top breakout. So I kind of waited to add on big once it pulled back to that, well, not big, 3 contracts, 2, added 2. And now you're at the 21. So that triple top, what was resistance, now becomes support. And that's all on the 1 minute. And you're at a wall right now. Man, come on. I was up there. If this doesn't hold, I'm going to stop out because I want to go eat. Right now we're bearish because we didn't hold that support. We got 3 black crows. Man, I don't know. Market's still red. And then 5 minute sell here on AMD. Back to resistance, which was support.
Yeah, but hourly's about to roll over. What I've noticed is there's a little flurry of buying at the top of every hourly.
So I think I'm going to have a lettuce wrap hamburger. Maybe. And for right now, I'm going to head on out and get that because I can't keep it off my mind. I haven't ate since 1, and I think I had just a couple, a small snack.
Moving funds between your...
So I'll be back. PLTR pulling back some here. And the video is coming to the 63. Come on, break out. Dad, can I ask you a question? How come Grandpa doesn't come in and sleep with me anymore?
Distribution. The 2 grandchildren planning for their college educations. Someday it'll be their turn.
It's a disgusting family.
Be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis, Morning Movers covers it all. Grab your coffee.
470.
Every
Let's
trading
go.
day at 8 a.m. Eastern, only on Schwab Network.
Give me what I want. Well, 1, 2, 3.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price
We bounced off
moving
the
averages,
/ES
oscillators,
bounced
and
off the
much
VWAP there.
Best of all, you can ask questions direct.
See right here? On them 3 black crows.
10 seconds, so this hourly rolls over, so watch for, watch and see if I'm right about this buying on the hourly.
What's on the, what, SES? On the yes? We got to break the 50 on the 30 minute. 50 SMA. Yeah, I'm glad you weren't around Monday because you wouldn't like me Monday. I was giving Schwab a cussing because they just kept being negative and tariff this, tariff that. And I said, God, I'm sick of it. I went into a rant. They weren't acting like Schwab, they were acting like CNBC. So I sent them a message. And they sent me a message back. Then the next day it totally changed. The format changed.
Yeah.
So I don't know if I was an influence on that or not, but it was a wild Monday. And back to even. I think I'm gonna run up there and get some hamburger and come back and cook me a burger. So I'll be back. You want me to leave this on or off?
You can leave it off, actually.
Off?
Yeah.
You gotta keep.
Didn't hear me when it's running.
Okay, you gotta. Don't leave me. Don't leave me. Yeah, bye. Shit. They don't feel good. Oh, there it is. Whew.
we lost the support guys. On Master Rob, so on my right screen, you got that 430.7 level that it keeps wicking to and then bouncing from. But it wicks all the way down here to this 428. So I've got an alert set there. I'll watch it at 430.70. I'm not thrilled that SPX can't hold this orb, y'all. it is. Alright, well, that's great. It pushes all the way down to 6280. Load up some golf, see if I can't catch this enough. Yeah, I sold them when we lost the orb. Well, I didn't sell them, stopped out. I had 20% stop on all my orders, so. I'm not even watching these 5-minute candles. I'm gonna burn it to the 15. I go to 30. Yeah, I'm gonna watch the 30. I'm not gonna fake me out.
So goddamn expensive. Okay, I'm back. I'm back.
Yeah, it don't look great. We had a recovery, so everybody could get out pretty quickly. It was a little bit green, but I think they're being sneaky and gonna try to push it down around 62.80 by the end of the hour.
We're at the 200 right now.
Yeah, but I got a pretty strong, like, support that trend line down there at 62.80. Plus, I'm looking at the book map. 62.80's got liquidity in it.
Yep. Well, we landed on that 200. We'll get my burger started and I'll be right back. I'm still in these. Well, that sucks. I can't believe I got cheese and the frickin' shit's got mold in it.
Good for you, make you scream.
Dadgummit. Well, here I go again. That sucks. I've never done that before. And life's always surprises. You know it? I can't believe it. I've never bought cheese shredded cheese that had mold in it. Never. And I bought a lot of cheese. Oh God, I gotta go. I'll be back. Yeah, that's what I say.
Did you just buy it?
I just bought it.
Oh shit, you gotta turn right back around?
Yep. So I'll.
Yeah, that's the thing that I hate.
You ever done it? You ever bought cheese that had mold in it?
Oh, dude, yes. I bought the wrong cheese. I bought bread with mold on it.
I've never bought it. I mean, I bought a ton of cheese. I've never.
I bought freaking sausage that's already expired.
I could probably eat that, but I'm not going to eat this moldy cheese.
Expired pork? Nah, just shoot me in the head. I ain't eating no damn expired pork.
I'll be back. Okay, I'm back. Yeah! Nailed it.
Figured you'd like that. I was hoping you got your
$5.
cheese before you hit that trend line.
Huh?
I was hoping you'd get your cheese before you hit that trend line I got drawn up there.
Yeah, I got out of it just now, $5. A little late, but I don't know how high it got.
I mean, another 4 points.
Went to 7, shit. That cheese, that loaded cheese cost me $600.
Yeah. That's the most expensive cheese known to man.
Yep.
Bought a cow.
Turn it. I could believe it. I wasn't even watching the market. I just went and hurried and got there and got back, and oh well.
Some days be like that.
Yeah. Yeah, Mama said it used to be, it bees like that.
I'm watching Master. They just bull trapped the hell out of a lot of people up there at 435.
Yeah, I'd be careful with it, trading them right now with that big run we had yesterday.
Mm-hmm. Yeah, I'm watching the book map. We got 12,000 orders sitting at 430.
That kind of sucked.
No, let's say I would have made more than 600 on that. Okay, well, I'm gonna go get my burger started. I'll be right back again. We're at support again. If this holds, I mean, this is where you stay bullish off the 63, but I'm gonna wait. It's gonna be the best hamburger I ever ate. We're at the 50 right now, and we got the orb at 62, 56, 58 on the 1 minute.
Meta bid a nice little bounce this morning, $7 off that call. Then we got Mr. Y'all were talking. We got a triple bottom on Mr. Master. Now, I'm going to look at the 20-day and I'm going to tell you something. We hit my resistance level yesterday. So this thing could drop more. It can get down to 415. So I'm going to wait. I know the tape looks good right now. Seems a little bullish. Daddy, can I ask you a question? How come Grandpa doesn't sleep with me anymore? And don't wink at me, you old nasty old man. Well, it looks sexy. I wonder if this is it. IWM, I think, hit my support level. Yeah, definitely hit support. Falling wedge. We had a tweezer bottom off this here 1 minute when I called them 5-minute candles, 1 minute candles, 5 of them. Tweezer bottom with a hammer, hammer, hammer. home. Losing it. Okay, we're back to support, back to the orb. Retesting 330. Kind of a rough day today. I shouldn't be taking too many chances. These are $3 now. A Kraffel burger, bread and butter pickle, and cottage cheese. I'm not going to take much more risk here if this keeps up. We just broke support. Market's not too bullish. We're at the VWAP on the /ES, so it really has to do it here. And we got the 200 EMA. We could drop more. We got inverse head and shoulders. It takes you about 62.50. Right at 62.50. If this doesn't hold. S&P hit all-time high Thursday. Well, what do you say about that, Alex?
Well,
You bear?
half a leg lower. The question is how prolonged of a leg, how deep of a sell-off is it going to be, and how excited after that first dip that's bought doesn't work when that happens, are they to buy the second one? Because really what's happened is I see as more of complacency has been brought back to the market in the short term, where we were down 35-40 overnight, and we open up and we rally to down 20. Okay, well if you're an intraday trader, if you're a trader, you're being rewarded for buying the dips right now, as long as you're nimble and you take that position off. So until that behavior has some sort of negative outcome, it's going to continue to happen, and that's just the reality of markets. The market's all about pattern recognition, and this reminds me kind of the time frame in 2015 in the summer where we would overnight.
Did you hear what I said?
Lower,
Pattern recognition.
At the time, it was about 1-2%.
That's why I trade patterns.
And by the next day, it was like we were back to unchanged. And then August 24th, in that time frame around there, Thursday, Friday happened. We were down. We finally broke below, and then we were limit down on Monday, August 24th. And that was the first time in my career of 2015 that I saw the market go limit down. But all summer long, even if you were negative, you watch the market go down 1 or 2% and then immediately rally back. And you were just beaten into, hey, this is just how the market's going to trade, until it doesn't. So what I would just say is, expect more of the same, but acknowledge that at some point it's going to change, and just recognize when that change happens. That's how you're successful at this business, is recognizing when one regime of trading changes to the next one. It's what has led you guys to long careers, and it's oftentimes something as simple as watching volatility.
I talked about that with chart patterns. There for 6 to 8 months, I don't know, a year, I was looking at chart patterns and trying to determine what's going to be the next move. And we went through different kinds of patterns. We had triple bottoms, and we had them head and shoulders, and then we went through the expansion patterns. And this has been like in a 3-year span. Right now, we could head down to this shoulder line and I'll really load up. at 62.50, which would be a double bottom. So it had two confirmations. Was this hamburger worth over $600 loss? I mean, left on the table? Hell no.
Glide into earnings next week before we get to large cap tech coming right on the horizon, and that's where things will get real interesting, Tom. But I think the banks, based on the run they've had, all high 30% moves, now a correction, and then this week ahead of earnings, that makes the banks' earnings a little more interesting coming next week. So yeah, not only are we going to get banks, remember we've had a real slow week for earnings, just really Delta. And we have had virtually no economic data, but next week, full of economic data. And then combine that with earnings, and then always the headlines. Yeah, next week's going to be much more hectic than this week, guys.
Hectic.
Yep. Earnings, it's the fun time of the year, earnings season for us. Alex, you had a thought on this?
Well, this ties into, but I'm coming back to our...
Now, this was my thought, and I talked about it yesterday. Earnings have been... The last earnings session we had, many of the major indices companies could not give a forecast. And I wouldn't be surprised again if the earnings are good and they still are going to be a little bit frigid on giving a forecast because of these tariffs. Now, I don't think tariffs is that big of a deal. I really don't. I was more concerned about inflation in the past 4 years. And they weren't. Because I think it didn't have to be like that. I'll never forget the Biden regime on how rigged the market was under their watch. Not a word about inflation hardly at all. And I was paying up to 40, 50% on some of my stuff. More in a year. Always clean? Yeah. What do you think about Joe Biden's inflation? Hello? Did you hear what I said? There we go. Okay, 380, we're at the 200, 3 white soldiers. Make a business decision. We can hit the 200 EMA, so you could get an extra 50, 60 bucks out of it, but I'm out. What'd you think about that, Rob? Okay, so I stayed in these trades.
Long had a meeting with Trump.
I stayed in these, and we had 3 white soldiers to the 200, and that's an exit idea if you're a scalper. So I got in it right here, added on right here, and sold it right here. Now I'm telling you, there's not too many traders out there that trade like I do. I'm probably one of the #1 top dogs when it comes to cost averaging down. Unless you know some that do. Well, I doubt if you do. But I've sat here long enough to know better. Just keep taking loss after loss after loss. Rob, is that pornography? I think Rob's posting pornography. You don't think I'm funny today?
Happy birthday.
Oh, excuse me. Justin Bieber releasing a new album. I never liked the kid, but I know some of you probably do. I thought he was a jackass. Especially if you hung around with Diddy. And I don't like Diddy. I'd tell him to his face. I'd actually probably punch him right in the mouth. We got a little reversal on Mister here, double bottom. Did you see that perfect setup there, Robert or Rob?
Happy birthday.
Happy birthday. Here's an old Boston Terrier.
Happy birthday.
I'm a bought terriers. Okay. But a rising wedge on the SPY right now. And we could have a head and shoulders. There's your head and shoulders right there. So that's a resistance. And if it breaks it, we can have a new high. I don't expect it, but it could happen. Or a double top. Or another head and shoulders straight across. Just like that. Straight. That'd be a pivot point inside of that flag. There's another trade I could have took. SPX just now hitting the 200 EMA. Double. We got a double top to boot. Not sure about a big run. I'm gonna go get me some water and I'll be right back. Waiting for the next setup. Right now it's 12:34 Eastern time. We're definitely bounced off the VWAP on the /ES. We're bounced off the 63 just now on the 1 minute. 3 black crows and a hammer. Oops.
For us, this is just a name that's really hard to bet against right now, even at this valuation. I think this chart is really interesting. This is app engagement, and you can see that on the far right, just the massive uptick. And while digital sales, this isn't the main, driver of sales at Costco. Costco is kind of like a discovery experience where, a lot of people want that in-store experience. They want to be able to go grab that rotisserie chicken or go explore through the aisles and see what they can find. But we are seeing an uptick in that digital engagement. We're seeing a lot of consumers who are now opting to use that same.
I don't know about it, baby.
And so I think that Costco
I still think some of them it's overbought. I mean,
other avenues of growth drivers, and we think it's also just getting started in
cost.
International expansion. If you look at the international growth, I think those comp sales are rising at about double the rate.
I took my eye off of IWM.
There's still room for growth here in this name, and at least when we look long term, we always say our best indicator of the long term stock performance is consumer sentiment levels, and consumer sentiment levels for Costco are historically high and rising, and higher versus peers, higher versus Sam's Club, higher versus BJ's Wholesale. So for us, when we're looking for those data points to show that near-term weakness, it's just really difficult to find. And so, it is valid valuation.
Difficult to find.
But at least in our data, this looks to be justified.
Megan, when you look at this, this stock.
SPY trying to break resistance here.
For the overall consumer at this point.
The head and shoulders.
Sales data next week. They just released their numbers for June, comparable sales up nearly 6%. So those are still continuing to move to the upside. They just hiked their prices for their membership. Do you guys see any inclination that maybe the consumer is pulling back a little bit? Because,
nope. She just told you no, you idiot.
From a slowdown in the economy. Are you guys seeing this in any other names, or is Costco still the gold standard here that it doesn't matter?
We're seeing a bit of resilience here. I think that's something that
resilience.
I think that's something that Landon even may have hit on earlier this week when we talked about deltas. We thought, maybe there's a little bit too much fear baked in, and we're seeing, some surprising overperformance.
My shopping patterns have changed tremendously in the past 4 years. I mean, it was nothing for me to go out and have dinner and spend $60-$70 a night just for dinner. and 2 or 3 times a week. Now I don't do it. I just don't do it no more. I don't go out and eat like I used to because that inflation. I still try to manage my life through my business. Whatever my business makes, I can, depends on how I want to live. But with the government shutdowns and COVID and 30-40% inflation, I just got fed up. I mean, that 30% inflation stopped me from going to the restaurants and buying family gifts and handing money out. I told them too, every one of my family members, Jim, can I borrow a couple $100? Hell no. Not if you voted for Biden. I ain't giving you shit. I did redo my mom's and sister's trailer, but I didn't want to, but I did, because it got pretty bad. I put 20 grand in that thing.
A little bit, but this is one time that gives myself a little room past that 200-day moving average, selling the 950 put, which is right at about a 69% chance of finishing out of the money time. A little bit aggressive, not in the strike price, but in the width of the strike. Remember, there's several ways to adjust the risk out of position. This time I used the width of the strikes, Tom.
Yeah, big boy. Put your big boy trading pants on for this one. Out in the July 25th weekly cycle, so just a couple weeks till expiration, really short-term positioning. Below that 50-day moving average, as Kevin mentioned. Sell the 950 put, buy the 930 put, short $20 wide, neutral to bullish put vertical. Collecting roughly about a 360 credit, as Kevin mentioned. It's closer to $4 now, so you can collect some more option premium. But if you collect that 360 credit, that's what you can make on this trade, right? 3 out of 4 scenarios, your profits goes higher, stock stays where it is, stock goes even lower. You can be wrong as long as it stays above that break even if you collect 360 of 946.40. Now, you do have some risk on this one because it is a wider spread, $20 wide. You've got $60.
We got a megaphone here, I think, coming up.
360 credit on that. So you got to keep that in mind also. But Kevin, when you look at this, it's positive time to
could start a position here, but I'm going to wait and see if we hit the 200.
Continues to consolidate
on the SPX. Maybe stop it right here at this wick. It could stop here. It just triggered it. Okay, I'm gonna get my order ready. Get 5. The 6270s have 54,000 contracts. And I got 5 orders in, and I'm going to get ready to buy them here in a second. That's a 62.70s. We're back at 250 here. We've got a megaphone. You think we can go lower? Yeah. I'd like to see it hold here. I'll go get my water and I'll be right back. I might do something else too.
Kevin, when you talk about this is all about the AI platform. They've gone to being mainly a contractor for the Department of Defense and the contracts that they had there, where the commercial side of their business is now half of their revenue, and that continues to grow. It just feels like the growth rates and everything else that you're seeing on a quarterly basis, they can do no wrong as long as AI stays in the forefront of our discussions.
This is a company, Tom, that started out as an AI player in the decision-making process. And then that started with the government, and they became very popular with the government. But that is not what made the stock go hyperbolic. What made it go up so exponentially is when they were able to take that same business model and put it to small and medium businesses. And that's when things went absolutely crazy, and the valuations are insane. The growth is insane. They're profitable, Tom, but they're not gaudy earnings per share numbers, right? The earnings per share, the PE ratio is massive, so the valuations are really unsustainable, but until they show some trailing off in growth, because the growth is so big and catching up, trying to catch up, Tom, it's just a great story in the AI sector. I don't know how it'll end, but man, we're right in the middle of it right now. This stock looks incredibly strong. Up again today with the market down.
Yep, up 5% this month. Up 420% over the last 12 months. And you mentioned those PEs, Kevin. The forward PE on this one above 240. That is just astronomical. Optimism for growth is just massive in this name. A lot of people are saying it's going to be the next $1 trillion market cap company, but you know, with valuations that high, they better meet and beat on their earnings. But they've got earnings, and I think that's what's going to parlay into my two trades that I've got here, Kevin, on the 4th of August. So we're going to avoid those earnings events because that could be a catalyst and have some event risk in it. So first trade I looked at, Kevin, kind of is the same setup as your Costco short put vertical, where, hey, maybe you feel like you missed the run up. Maybe you feel like, hey, I'm still bullish on the name. Well, here's a strategy that may be able to take advantage of it while still giving yourself a cushion to the downside. August 1st, weekly options here, Kevin. So just a couple weeks till expiration, 21 days. Sell the 138 strike put, and then against that, because we want to stay risk defined in the name like this, buy the 133 strike put. So short $5 wide, neutral to bullish put vertical, collecting roughly about $1.50 credit. That's what you can make, $150 with $350 in risk. But where's your break even? 138 strike that you sold, add that 150 credit to it, 136.50 to the downside is going to be your break even. So you do have that cushion. Kevin, when you look at this, it's a rather conservative trade. It's still risk defined. You've got a higher probability of success on this one. So even if the stock does fall, you can still be profitable.
62% probability of finishing out of the money, Tom. The expected move out to August 1st is about $14.80. So you're a bit inside there. You're $5 lower. All you want, Tom, is what's been happening to keep happening, right? That's what you're betting on. Any correction, it may get to 138 very quickly, but this stock has not shown a lot of chances of correcting right now. We don't know what it's going to do, but this is a medium to high probability short put vertical, and 3 of the 4 scenarios it's profitable.
Yep, can go higher, stay where it is. Actually, you can be wrong and the stock can go lower as long as it stays above that 136.50 break even on that one. The idea here is over the next 3 weeks, time decay works in your favor, and this thing goes out worthless. But as we mentioned in that last block, as long as the market's open, liquidity is provided, maybe closing it, maybe it contracts to 50 cents, and then, you still have the risk on that trade, that $350 in risk, that maybe you just close all or a portion of it if you have that ability to do so. All right, let's move on to the next trade. So it's still directionally bullish, but a little bit more aggressive, and giving myself a little bit more duration, and it's past earnings. So we went out to the August 15th monthly options. So 35 days to expiration. You got 5 weeks in this position. We're going to buy a long call vertical as a bullish stance. The other trade that we did, we looked at the short put vertical. You don't need a move in that one, right? You just kind of want the stock to stay above that 138 strike. Here, this type of strategy, you need a move to the upside, and that's the difference here. Buying the 140 strike call on Palantir, and then against it, sell the 160 strike call. So you're buying about a nearly $4 in the money call on that, the 140 strike. So it's got the higher delta, it reacts more like the stock. And then against it to offset some of my costs, because, hey, I've got 35 days in this. Maybe the stock goes higher, but maybe it doesn't go to 175, 180, 200, something like that. You sell the 160 call against your long 140 call. So a bullish $20 wide call vertical, you're paying roughly about a $7.80 debit for it. The debit you pay is going to be your risk, $780 per spread. But Kevin, you look at this one, you need the stock to trade above 147.80, but on a percentage basis, that's not a big move for Palantir at all.
Yeah, exactly right, Tom. And this is a great, comparison of the short vertical versus the long. Long vertical costs you more money. Long vertical, you need a move, but the payoff is exponential. Short vertical, it's less of a credit. It's you don't need the underlying to move to be profitable, but the risk reward is skewed to the risk side. So these are two ways to look at a vertical: one long, one short, both bullish, right? But two ways to look at it. But like I said, it depends on how it's
boom, baby.
And I think that's a good way to look at this. How comfortable, how conservative you are, what your risk reward setup is. Duration's different on the two trades also, so that comes into this trade. On the short put vertical, that
it's 4:30.
You need the time decay to work in your favor as that price of that vertical, the short put vertical, contracts. Here, you have some more flexibility over the next 35 days where, hey, I'm buying this vertical so that if the stock maybe pops to 150, 155 over the next week, 2 weeks, 3 weeks, gives you opportunities of potentially closing all or a portion of that, locking in profits if the market's open, liquidity is provided, where you can get out a portion of it or all of it if the stock moves the way that you need it to move. But you do need to move above that break-even 147.80 on this one. So two ways to look at the same directional bias on a typical or on a stock like this. And remember, Palantir just hit all-time highs of 148, so you need it to continue, maybe make new all-time highs for that one to work out. All right, that's going to wrap up Fast Market here today on the Schwab Network. But stick around. Coming up next Gen Investing.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money.
Okay, here's a band I used to play with. I wasn't in their band, but I'd sit around and jam with them. See how this sounds.
KFC Phillips are back. Enjoy.
With my dog and Persian cat, living on easy street. You don't need this or that. Bills are gonna be due, and the bills won't come true. Checks this week, living on easy street. Living on easy street. Easy street with a dog and Persian cat. Living on easy street. Don't need this or that. Bills are gonna be due and the bills won't be due. Welfare checks this week. Living on easy street. Street with a dog and a Persian cat. Living on Easy Street, don't need this and that. Bills are gonna be due, and the baby will soon be two. Go work welfare checks this week. Living on Easy Street. Living on Easy Street. Living on Easy Street.
If you believe the journey is
Split lip Rayfield.
you'll love exploring in the 2025 Subaru Crosstrek. Standard symmetrical.
Always filthy, may I help you? Always clean, may I help you? That's supposed to be a joke. Oh, this is the IRS? Oh, I'm using a false name under my business? Always filthy. Okay. Timus.
A deal announced in May of last year, T-Mobile was acquiring U.S. Cellular's wireless operations and some select spectrum assets valued at around $4.4 billion. So Telephone and Data Systems owns about 83% of U.S. Cellular, according to the statement. But the transaction does remain subject now to the FCC's approval per the companies. So that's at least maybe that matter closed. Plus, we got some analyst news today. KeyBank downgrading T-Mobile shares to underweight from sector weight. $200 price target, saying the underperformance will continue as T-Mobile is fiber deficient in a converged and bundled world. They do believe
TSM new high.
Competitive environment will limit upside to expectations for the company. We did also see Scotiabank, though, trimming its price target to $271, so a bit more optimistic there, but also raised its price target by both AT&T and Verizon by about $1 a share. So it's a mixed coverage from the sell side today, but I think that it's interesting to hear even the stock's underperformance, which is the verbiage that KeyBank used, because to your point, this has really been in a league of its own for, I mean, like the broader scope, bigger picture.
Yeah, it's had growth opportunity. I think that's the big thing. And usually if it's growing, that means one of the other ones is losing some of that market share as they're probably winning it. It's such a saturated market, it's utility-like. So not sure. The same investors are looking at T-Mobile, AT&T, Verizon, and our next couple names. Next one being Spotify. Rough week for Spotify as well, rough month for Spotify. I was just talking about how the markets performed all right over the last month, obviously closing at an all-time high yesterday, but Spotify is actually lower for the last month of trading. About a 10% pullback from its high, too.
Yeah, I mean, another name where quietly we've seen it definitely come off of those highs. Spotify, though, has been operating in a very difficult market, just trying to find that balance of course, keeping the artists on his platform happy, as well as shelling out pretty big cash for some of these podcast deals. And the audiobook offerings also, from a licensing standpoint, not exactly cheap either. But KeyBank today actually raising its price target to $860 from $640, which is just, I mean, ridiculous. But nonetheless, they're keeping an overweight rating. They expect Spotify's second quarter results and third quarter guide that could contain some noise around Forex, as well as social charges and seasonal gross margin dynamics. And as we've seen been the case in prior calls, they do advise any buying near-term dips to right now still remain. They still say that that's a decent strategy, but music remains to be under-monetized in their opinion, and as a price inflationary market, competitive dynamics are still favorable, and there are still near, mid, and long-term initiatives that support this high teens of revenue growth. JP Morgan, on the other hand, with a bit less optimism from the price target, but still $780 from $730 a share with an overweight rating, updating their estimates on the internet space as part of their second quarter earnings preview in regards to the internet space. So Spotify does have earnings on July 29th before the market opens. I know we've pulled back, but that is a thing of beauty from the chart. I mean, a name that again, when you zoom out, it looks even stronger than what we've seen as of recently.
Yeah, and this is a analyst in Justin Patterson from KeyBank that's been overweight Spotify in terms of rating going back to September of 2021. That 640 price target, when he put that on there at the end of April of this year, it implied 11% upside from the closing price that day. It just goes to show us how strong the stock has performed. But the new one implies about 21% upside. So quite optimistic, but probably more of a catch-up update than really a change in how they feel about the stock. Because like I said, Justin's been overweight this stock going back to September of 21.
Okay, and I think that's such good context because you forget how quickly things have run up, really, since the April prices. I mean, across the board, you could say, as we pretty much bottomed in the overall market then. So I think good point that he's just basically now adjusting for the fact that we've seen such a revision in price. Next name today, though, has not gotten that same degree of love as far as its price performance, which is AMC. But today, with an almost 10% jump, because this is what AMC does. I mean, it moves in pretty wild swings. Wedbush actually upgraded shares to outperform from neutral. Price target raised to $4 from $3. They do believe that AMC is poised to benefit from a more consistent release slate over the next several quarters, saying AMC is positioned to get market share now in 2026, with the most premium screens in North America and expansion plans now in Europe right now, as well as repaying or postponing all of its debt that was due in 2026. So those are all the reasons for favorability, but they do say this has relieved some of the near-term uncertainty, and they're now completing what Wedbush expects to be the last major issuance for the foreseeable future, putting a significant headwind behind it. So AMC, I have a whole lot of thoughts about it. This name still trends on social media platforms from time to time, and I check in on my favorite community of traders, the apes, and it's been one where I can understand there's whole degrees of speculative threads you can go down, which we won't get into, but all I know is price is what we can know for fact. This name has chopped around, but has been stuck between around $3 and $4 for now a while.
So I have a hunch as to why it's popular. Well, one, it was exciting at one point.
It was.
And so some people may be feeling a little pot committed, perhaps, and what do they call it? Bag holding a little bit, unfortunately. But the reality is it's also a $3
Wedbush upgrades AMC
and can move 10% a day to the up.
You piece of crap. All we need is for this idiot to be pumping this stock. It's not done shit in years. I looked at AMC this morning. I mean, I can't stand Hollywood. I really can't. Stock is climbing, lifted by Webb Bush upgrade for improving box office.
Quite well. I mean, we are up 82.5% year to date, up 177% on a 12-month basis, while also being off highs by about 1.2%. So a thing of beauty also from recent performance. Citi today reiterating its buy rating, raising its price target to 123 from 100. Saying they see more upside for shares, and right now this is due to the robust third-party data. They do also believe U.S. App Store rulings may help their cost structure. So that's unfortunately where I think there's pause on this name. Again, I'm more so speaking on like the long-term history of this company, where they do have to find that balance of paying their creators and paying obviously like their workforce, while also like churning a profit, which they've yet to really see happen consistently.
Yeah, it's a growth company, right? And how much you want to pay for it? That's always going to be the question. I think the business model has always been an interesting one. But to your point, I mean, the one positive is they are, at least over the last couple of years, free cash flow positive, EBITDA positive, but on the adjusted diluted EPS, they've yet to get out of that negative sign. So revenue growth is starting to stabilize in the 30% range. They'd like to see that reaccelerate. But they have seen user growth start to really take legs higher. I think that's an important piece when you're a company that relies on eyeballs on the screen.
Yeah, and I know definitely not serving maybe our demographic, but I do know that those that are under the age of about like 12 love this platform.
Well, here's an interesting question, and there's no right answer, right? But if you were an investor right now, you're trying to take a professional approach. So I'm not saying the whole portfolio, I'm saying a small amount. But if you're thinking, what stock, if I was going to put a small amount of money into it, has a better chance of returning a large amount of money? A name like Roblox, a growing kind of decentralized video game that is targeting a younger demo, or AMC, a movie theater that is trying to figure it out and charging a lot for popcorn. Like, to me, that answer is relative. I'm not saying that there's not a risk to a Roblox, But like to me, what has a better chance of growing to something much bigger? To me, it's simple. It's Roblox.
I completely agree. And I think it's sometimes we overcomplicate it where, hey, like look around and see what you see people are buying, what people are interested in. I mean, I think I'm part of a very niche demographic that still goes to movie theaters, but like you go into them, they are still
I just
fairly
don't see what it becomes. You know, it can be fully packed, and that can be a successful business and super, super great for all that are invested and working there. But how does it change the world? Like a company like Roblox, I'm not saying it's going to change the world the way an Nvidia or a Tesla or an Apple has, but it can change the way video games are made. It can change the way that people interact with them. I just don't see that happening from AMC, at least not from their core business. They'd have to do something different that we're not talking about.
Totally, Roblox so scalable. I mean, you just see it with their users.
They're talking about AMC now too.
For a whole lot of costs, just based on the fact that it's a platform on, of course, like the web. But we'll leave it there for the top of our show here. Coming up next, we'll talk what has worked this week as far as hitting fresh all-time highs. We're talking Nvidia and Oracle.
That's funny.
Nvidia up 4% this week. Actually, Oracle.
I thought I got that AMC on my own, but they were talking about it at the same time. I just wasn't listening to them. So, I really can't stand this company. Now, this was a huge controversial company. It got caught in that every time. I mean, it had all these splits and it'd reverse. The price would drop out of it. I mean, it was billions and billions of dollars in debt. This was I think a Zach Morris trade back in the day. He made a few million on it when we traded pennies. Now, I used to trade this stock, AMC, but that's when it had a better reputation. And then Hollywood kind of got out there and became political, and I kind of went woke on Hollywood, and I stopped going to their movies. And then COVID came. You know, so I'm just not very bullish on Hollywood at all. Maybe back 15 years ago, I'd probably buy this. But I've been beating this guy down for 3 years for pumping this stock every single frickin' week. Name's Mikey, and it's done nothing but drop, and he pumps it every single, because it's a roaring shitty stock. Then you got this Dan Ives out here pumping it now, which he has a better reputation than roaring shitty. I don't like roaring kitty either as a trader. I don't know, maybe a human being he's okay, but I mean, this has been nothing but drama. I personally can't stand Hollywood too, so that kind of, I'm definitely biased. But eventually, what comes down eventually turns around mostly. We'll see let me find a support level. I'll just see if we get a support, and I might buy it. Let's look at the 30-minute 5-day. So somewhere right around 305. I'll set an alert just a little bit above 310. I might buy some of it. Just because Dan Ives is pumping it. It's a pump. They're talking about NVIDIA.
Kind of a question mark, a bit of a mixed picture here. On one hand, we had this long series of bearish divergence where price was grinding upward.
I thought I set that alert there.
Downward, slipping out of the overbought area.
Oh, I raised the price
up. A series
up.
of progressive lower highs. However, the rally came rather fiercely at that point and did push back above that level, but then did pretty much the same thing again. More bearish divergence here. Price made new higher closes. RSI trended downward. Now it's reversed once again. A great example, perhaps a bit confusing to follow, but why you don't make trading decisions based on one indicator doing something. False signals can be common. It's not really a complete picture. Just general food for thought, trading best practice.
And this name, I've said maybe 3 times this week where I'm like, the $4 trillion club, but they're a club of one. So this is the only name that can boast this title right now. I will be curious to see how quickly Microsoft catches up, but getting ahead of myself there, when you look at the recent trend though, which has been so substantially felt, and I think a huge contribution to the overall market's recovery, what else are you watching when looking at NVIDIA, of course, technically?
Actually, kind of an interesting candle pattern today forming. We can see that today we have a large green candle in which the real body, the distance from the open to the close, completely swallows up the previous day's real body, disregarding the intraday lower wicks. The real body is what you compare for these. So a bullish engulfing candle, we would need bullish follow through to start Monday's session there. For that's the next step of confirmation of that type of candle pattern here. But really, you're at the highs making bullish engulfing candles is kind of an interesting situation to think about here. So for now though, we are very close to our +2 standard deviation channel, 2 standard deviations up from our blue linear regression line here, our line of best fit. This tells us that price is at a relatively extreme point versus its own history here. That certainly does not mean it's going to stop going up there. It's just one way we can try to assess a benchmark when a price is making significant new highs or lows where we don't have much price action to go off of here. But as I said before, 153, 154, that's the obvious supportive area to keep an eye on.
Okay, and all that to be said, now as we do look to trade this name for example purposes, our theme of Chartmaster today is names that are peaking out at levels that have never yet been touched before. So with that in mind, for example purposes, leaning into some of the strength, the optimism that has really held for NVIDIA all week long, Alex.
I was going to say, well, the theme for the example trade is then they're going to make new ones that are much higher because these are all very optimistic, bullish strategies across the board for today's session, or today's show, rather. Looking at NVIDIA, now we don't get NVIDIA earnings until late August, maybe early September, not a confirmed date yet, but it's a late reporter. We know that to be true. So I went to the furthest dated options that I thought were probably to stay ahead of that earnings event. Buying the August 22nd 185 call, selling then the August 8th 185 call 2 weeks prior to create a 185 call calendar. Now, doing some quick math here, Jenny, that would be about a $500 billion rally for NVIDIA. So, looking for the $4.5 trillion club if it gets to that 185 level. I don't know if it's perfectly that, but basically we'll call it in that zone, which is really what this stock or this style of trade looks for. It peaks out at 185, but it's really more of a zone. If this rallies up into the 180s over the next month, this has a really good chance to expand from that $1 debit to a bigger number. If it doesn't, though, only $100 at risk. I know only, but compared to the other two trades we're going to look at today, that is the smallest of the three.
Yeah, and that's important context. It's just wild to me the way we can talk about these swings, and they seem actually now reasonable. And I remember the day before any company was worth $1 trillion, and we've gotten to now talking about $4.5 trillion so quickly, which has been just amazing. So really record-setting week for NVIDIA. Now the case with the Oracle has been we saw consistency, at least with the Oracle, where it's like last week we said new all-time high after new all-time high. This week we've lost about 2%, but it still has felt like a massive upswing in this name as well. Obviously not quite the same size though as our peer NVIDIA.
Yeah, this one we have backed off a little bit from those highs we reached before, kind of seeing the opposite situation. In this case, what we have here is a bearish engulfing candle. You can see that big red candle completely swallowing up the previous day's smaller green candle. in this case, we are getting some downside follow through. Despite forming a green candle, we are lower here. So an interesting situation to think about, because now it's bringing us closer to the lower boundary of our rising wedge pattern here. Two trend lines converging toward each other, but both pointing upward, typically more bearish. It can go either way. What you're looking for is a breakout beyond either of the boundaries of the channel here. But, you know, typically more bearish is how it's viewed. If we were to start to move lower and break down, we had an old ceiling here that then became support, our red line, 216, price repeatedly topped out there. That would be one area many traders might have their eye on for a retest of potential support. We can also see that we saw very heavy volume during this gap up on earnings recently here. Still seeing volume spikes many times during the past couple of trading weeks here. Like our last chart though, seeing bearish divergence on the RSI. Now, once again, this is not as cut and dry as it may appear here, because the RSI still remains very high. We're still in the overbought area, that threshold of 70 here. So is this a momentary consolidation before the next leg up, or is this the start of perhaps a bit more of a drawdown? That's the difficult question that traders have to answer in this type of situation.
Yeah, and this name, I mean, has seen this whole revival with its AI business and the ways it's had these like big partnerships. It's been definitely busy, and busy for good reason. So again, when we zoom out and look at some of the bigger picture trends, what else sticks out to you?
Well, compared to our last chart, Oracle's move upward off of its lows has been even more extreme, because now prices between our +2 and +3 standard deviation channels here. We are seeing a bit of accumulation of volume here, right around 235 or so. So that could be one area to watch as a potential foothold. If price does continue to move higher, that could be where we see the next retest. 250 or so, that's where the +3 channel comes in. That's kind of a snapshot from this moment in time, though. It would be a moving target in coming days if price continues to travel upward here. So something to just keep in mind there. But we also see 216 old highs, volume node, 21-day exponential moving average seems like another key area to watch.
Okay, and great insight on two names that have been very impressive as of late. Oracle down a bit today, about 1.2%, but still did touch record highs this week. Appreciate it, Rick.
See when the last time he's put out a video, maybe he got, nope, he's still doing it. Look at this. One day ago, this is important. Can I tell you how many times he said this is very important in the past 3 years? In about every frickin' video.
Why does it always feel like your goals are so far away? With Cash App, you're good.
Always clean.
Earn 4% interest on savings when you direct deposit at least $300 each month.
You good?
Yeah, I'm good.
From gas to battery and zero turns to push mowers, you can mow your way with Steel. Shop in store and online.
It's time to talk one-on-one with everyone here, all you apes watching. It's been a minute, but right now we are living in the most important part of the timeline for both GameStop and AMC stock.
So you're full of shit.
Once. I'm all in, baby. Something
you're right.
brewing over the past year and a half, and I believe the craziest part of the timeline is about to happen very soon. Y'all see the setup in the back?
Didn't you say that 2 years ago, you dumbass? Didn't you say it 3 years ago, and you're still putting out these shitty videos?
It's been a minute. I don't even know when was the last time I recorded a video like this.
You still living in your daddy's basement?
I'm only gonna be like this for a couple days. I wish it could last. Going back to California, just came here for a quick little trip. Got some business to take care of. And then we're going back to the grind. For those of you that don't know, haven't been uploading because I'm just working my ass off.
You haven't been uploading because you're a shitty trader.
Door sales in the state of California, and I'm there for 6 months. So, you know, that's why I haven't been uploading. Obviously, no excuses, but it kind of sucks just, you know, watching.
Kind of sucks pumping AMC for 3.5 years and it's not moved a dime. It's actually lost hundreds of percentage points.
The most important parts of GameStop and AMC happen, and I can't even freaking upload. Before I do get into
You can't do an upload because you don't know what the hell you're talking about. I'm done with you, boy. He'll eventually win. I knew this guy named Mr. Wall Street. He'd sit and talk about the same stock year after year after year, and it'd be down 500 or 600 points. And, are you still in it? I'm still in it. I'm adding here. 5 years later, are you still in it? Well, it's going bankrupt. How many millions did you lose on it? And him, I liked the guy until one day I said, you know, did you sell, I don't know, some pump, some stock, penny stock that never could break out? And after about 3 years of listening to him pump it, I messaged him. I said, hey, this thing's getting ready to break out, and if you don't get out at 2, you're going to get stuck in it. And it was at $1. So it goes from $1 to $2, and I sell it. And I messaged him. I said, hey, did you sell such and such? No. I said, okay. And about a few days later, I get a message from my partner. What are you doing picking on Mr. Wall Street? I said, I'm not picking on him. I just asked him if he sold it. It was up 100% today. Well, he messaged me and said, I said, I don't give a crap. He's a pumper. He liked me. I mean, he thought I was a good trader, and all of a sudden he just went totally against me because I teased him about his aims, about his stock that he sat in for 3 years. And then it dips down to 45 cents. I'm going, shit.
Netflix was one of them. They upped their target to $12.30 from $12.20, keeping a neutral rating here. They updated across the whole internet space as a part of a Q2 earnings preview. This estimate, they say, reflects better channel.
He probably didn't even get that Dan Ives alert.
Yes, it's coming right off my trend line.
What's that?
Yes, coming right off my trend line.
Uh-oh. You did? We got an ascending triangle on the 5 minute. Kind of like a wedge, almost a rising wedge. Yeah, rising wedge.
Rob Master is at the fib, so the 430.7 fib, but it could come back down here to this 427 order.
Was we said this iPhone super cycle not happening.
I've traded AMC probably 50 times, but that was back 10, 15 years ago when it was a thriving company. I don't like the splits. The splits on this here don't do it justice. Oh gosh, it just way oversold. Let me do the Fibonacci's on this. Yeah, that's pretty close. I'll raise it up to here. 315. And above 50%. I might put $5,000 in this thing if it gets down there. I think I've traded it twice in the 3 years that Mikey's pumped it. But Dan Ives, that's a different story. I mean, I can... Okay, I'm going to set an alert off the 200 for the SPY. Actually, a little bit above it, 624. Did you hear that, Yoko? Here's Motor Mouth.
Out and Netflix top show for whatever the month is or the week is will be a show that's 5 or 10 years old that they've created, and now they have live program.
I'm done. I don't think I like her too much so far. I have to get her name.
There's my puts. 110 to 140.
Did you get in them?
Yeah.
Very good.
Taking my trend line.
Very good.
My stop loss is on the other side of the trend line, so as long as it stays below it, I'm in.
Very good. Now you might have some support right here.
I'm looking at the order book. Liquidity's at 6303.
I'm going to set an alert right above the 200 on that SPX.
You got a lot of liquidity at 6302. I'm out. My puts went from 110 to 160.
Very good. Now I'm getting ready to get in them.
The puts or the calls?
Calls. If we hold to 200, not right here, but one, there it is, right there. Now don't. This might be a little risky, so 250. The 6270s.
Sellers.
62.50. Let's see how close I am here. 62.70's at 230. Off the 200 SMA.
Peak liquidity at 63.02. Yes, if it drops any.
Good job on that last trade. Well, we're definitely getting more bearish now. Down $100. Well, not that. Still 100. We're at 220. Oh, I'm gonna go get me something to drink.
$63.02. Right where it bounced, right where I saw that liquidity.
Let's go. This just could be just a, we'll find out. We're squeezing again. $240. Might get a scalp out of this if I can. Oh, my girl's up.
That there's an experience with these brand ambassadors, whether it's a food festival, whether it's a Coachella type of event, that people are remembering something. We haven't had that in the past. Before, you looked at an item, it was almost like one and done. Now, what else are they introducing? And you're seeing the importance of bringing collections that are not only 3 items today, but how are they being activated? Look what was introduced yesterday. Levi's and Nike. You have 3 different items along with Levi's having their Beyonce Cowboy Carter tour influence. And it's making, when it starts with one, it feeds on itself and all of a sudden brand heat is developed. So I think it's different than yesterday, but I think the pace of it is ever so much faster.
Yeah, and I mean, to your point, Levi today now surging on earnings where you can see in real time. I mean, Gap has made even an amazing comeback. It's some of these brands where you just actually see it in real time reflected in their earnings. So I always say don't overcomplicate it. Look at what people are talking about, what's trending out there, and it can speak to retail. But before we let you go, I am curious your thoughts if there's any tariff impact, any concerns about spending. We talked about the stress of the consumer, and I'm like, the consumer is always stressed, but have we seen that play out in anything you're seeing?
About to laugh. Tell me where all the freaking liquidity is on Master.
PHV.
Jesus. When it goes, it's going to fire like a rocket.
I'm at 440.
Plus, looking at cheddar flow, there was a $1.6 million sweep on 440 that came in a while ago.
This girl, would you Go ahead.
Around 450s now.
This girl used to come around every Christmas time. I'd buy apparel for a couple weeks when they put her out there. Yeah, I don't know. This thing's still at 234. Oh, there we go. 245.50. Break it. We're at 260.
I'm thinking about a weekly call on Master.
$250. Come on, baby.
There you go. 280. I'm out my calls. 230 to 280.
I got 275 here.
And go back up to my trend line. There ain't nothing gonna stop that. So right around that 63.09 mark.
We hit the 50 SMA right here, so I got out at 275. The key word, Richard, was ever, and I have stopped out once. $330. All out, 330. Good job, Rob. I wasn't too confident in that trade until we started moving up, because I figured we could pull back and hit that bottom orb or that resistance. That's yeah, which is now support at 62, 56, 58. $4.10. Jesus. There I go again. %, or almost. I'll be right back. I'm gonna go stomp on my nuts for a bit. Unbelievable. That's what you are. I'm gonna wait for NVIDIA. So I'm gonna look at it different than you all. I'm gonna set an alert. I don't know if you're looking at it different than me or not, but I'm gonna set it down here at this support level, right above 415. Probably won't be today, but maybe Monday. And try to keep it above that 200 EMA on the 30-minute. Mixture's coming back to the bottom of the orb there on the 30-minute. That'd be off to 63, so you got a double confirmation. See, Funk, you don't know this, but I picked up a few things off you by trading with you. One, a little bit more patience. Paying close attention to where I used to pay attention to, and that's pre-market lows and highs. Going back and second guessing my entries instead of just jumping right in. Number 3. Number 4, going without booty for over 10 years. So I picked up a few things off you. That's what you are. Oh, NVIDIA. 3 black crows on NVIDIA on the minute. Okay, we've got a little pullback here. I'm still messaging Mikey. don't think he likes me too much. That's a nice spot right there too. Let's go ahead and put an alert right there. We're coming in on a support level on the SPX. But I don't know. It's 117. Right here. Okay, let's give it a shot. We got a double bottom. SPX. We're going at it again here. These are the 6270s. I'm going to see if I can get 225. I can get 230. Double bottom.
I got a trend line at 6304.50.
Okay.
And you got 224 buy orders sitting at that same level.
It's kind of descending. I don't know if you. This is kind of risky. No. A few more seconds, I could have waited.
Master's coming up near the door.
Oh, there we go. 260. We got a 1, 2, 3, 4 coming up. $270. Yoko. Come to Papa. You got a Head and Shoulders on Mister right now. Inverse with a bull flag. Well, well. VIX at 1603. Oh, God. There's a 1, 2, 3, 4 on the SPX. So if you're in a trade, make sure you take profit. I got out at 270 on that first initial spike. hit 280. Anybody ever seen the band Kansas? No?
Nah.
You know who they are, right?
Mm-hmm.
Yeah.
Ariel, Weberson?
Yep, yep.
Coming up to my trend line. Damn it! Cut that before you rip. Just cut that. That's why it's called a trend line. Oh, what's on that volatility coming from?
Mister's got a 1, 2, 3, 4 touch on the bottom. We're at the sweet spot. So if it's going to do it, it's got to break out here. This is probably the bullish spot of it, but it's a bearish wedge. So we could drop and then have a nice little bounce back up. Because it's kind of, see how we have this gap in here? But this is the sweet spot, so it's got to make up its mind what it wants to do. I like you in yellow, Nicole.
As that contracts, they're the government contracts, and I like it. But right now,
There it is. Let's see if he wants to do it now. So I will take the chance. Where's my Mister? What calls are y'all looking at? Next week? Yep.
Yeah. 440s.
Yeah.
The ones that are getting bought up. 450s were getting bought through the.
Yeah, I like that better. Kind of missed my. There's 23,000 contracts on the 450s, 15,006 on the 440s. Oh, I'm gonna go get something to drink, and I'll be right back. Some tea. I'm not in these trades. I'm just got to take a break. I feel like I've overtraded already. There she goes. I missed that one. Called it. Dadgum, see? That's perfect call. I mean, 1, 2, 3, 4, and I said, well, I'm going to wait for it to break that support level, and then bam. And I just didn't get into the trade, but it's up $70. Well, probably more than that. Now you're getting to resistance level. Mister. It's SPY bounced there too. 25 cents. Oh God, they got that idiot on here.
should take as a company. Give us your thought process behind these recommendations. Does it change your long-term outlook on the stock?
Yeah, I mean, first, it doesn't change our long-term outlook. I mean, we didn't change our price target. Continue to believe $2 trillion is the actual valuation for Tesla, and $1 trillion of that is actually autonomous. But in my opinion, the board, they can't be asleep at the wheel. First, give Musk his new pay package, 25% voting shares. I think that clears the way for ultimately an XAI merger as well down the road. But oversight in terms of just some guardrails around time spent at Tesla. And it's about the political gambles, right? I mean, that continues to be with the third party, and obviously we saw with Trump and Doge. I mean, it's been an overhang on the stock, and Musk needs to be at Tesla, continues to be their biggest asset.
Would you change your target if the board doesn't adhere to your recommendations?
Look, I do believe that the board and Musk, I think they're going to get to some sort of common ground. Whether it's incentivizing him in other ways to make sure that he gets to these, what I view as, very, very ambitious but attainable goals when it comes to AI. But look, it's been a clock strikes midnight situation. I mean, the board needs to take some control of the situation because Elon is Tesla, Tesla is Musk, and that's the reality.
All right, the high it went from 182 last year in August or so, went up to 488 today. It's at 311, and your target is 500. Updates on the robo-taxi rollout, when you could possibly see it expand to other areas of the country.
Yeah, and Nicole, I think that's also part of the issue. Like, if this was an Intel, I mean, it's a snoozer. You don't care, right? The fact when it comes to Tesla, you have the biggest chapter of disruptive technology growth ahead. And I'd say, unless it's NVIDIA, I'd say there's no other company that has more ahead of it. And it starts with robotaxi. Our team was there in Austin, very impressed with the ride, the safety, the maneuverability. That geofence area is expanding. I think they'll be in San Fran probably in the next month or two. I think a year from now is 25 to 30 cities. And that, look, Uber's going to play a role. Waymo's going to play a key role. But I believe the autonomous market will be owned and dominated by Tesla.
Let's switch gears down to Palantir.
It's a lot different than what all them other people say.
AI stock.
That's because they're so biased with Elon. Was it Waymo or whatever it is? And Uber, and they're upgraded Uber, and they done this and they done that, and this is the only guy that stands up for Tesla out of all them idiots. And I think he's right.
AI revolution, and that's why they're the Messi of AI. And I think Karp understands where the market's going as well as any CEO, I think, in the world.
And at this point for Palantir, I mean, we've seen the shares rising at the 422% over 1 year. Do you have a bull case scenario for Palantir where it can really surge?
I mean, it's a 2 in front of it, right? I think that's the bull case. I mean, $200 plus stock. But I think, look, as I've talked about it, in the next 2, 3.
We've had a bunch of sell orders.
I called a bull flag out of the SPX right here. Boom. We're at 350 now. The 6270s, 370. Jim's back in batting 100 again, 100%. Nice recovery on the ESs. He's held that rising wedge most of the day.
Master is about to do something big. It's either going up or down, but it's gonna friggin' explode in a minute. It's squeezing so hard right now. Bunch of puts rolling in for SPX.
Ten more minutes to power hour. I think I'm going to save my energy until the last half hour. 7 more minutes to go. Disconnected, reconnected. Oh. She must have smelt the marijuana smoke this morning in the building. I sure did. I hope this message finds you well. I wanted to send a friendly reminder that the Falcon is a smoke-free community. Smoking anywhere on the property is strictly prohibited. Please note that violations are subject to a $500 fine and will be considered a breach of your lease agreement.
Yep, Master just triggered one.
Oh, it did?
Yep, triggered my alarm to the downside. Just touched the orb.
Yep, and we're at support. Has to hold here. This is number. Go ahead.
I'm gonna look at the book map and find your liquidity levels. So yeah, you got 1,500 buy orders sitting at 426.55.
It's definitely a support that I have chalked down, but I don't know. It's just an intraday support level.
426.50 is going to be a big support, and 426 is another big support.
And we still got a double bottom at 424.
But you have 13,300 buy orders sitting at 425.
That sounds a little bit better.
That's insanity.
Yeah. I mean, I would start in here, but I'm going to wait.
Oh, look where my trend line is on Master. You want to ask me where it's at? Is it 425? Yep.
Where's it?
425.
Show me.
It's on my screen.
Your screen's not up.
It is.
Oh, it is?
I'm streaming. Oh my god, mother. Y'all got to get on me when I'm not streaming. I forgot that I freaking disconnected.
Ripper Man.
Yep, Ripper Man. Damn it. My levels are here and they're just freaking fire. Like, look at my trend lines. Look at both ES and Master and look where these son of guns have bounced all day. Like, my trend lines are fire. But it doesn't help y'all at all. Damn stream.
We got a fallen wedge right here, so This is definitely a support off the Head and Shoulders. And I think I got that on the 1 minute, that Head and Shoulder. Yeah. I mean, this is a good spot. I'm going to give it a little more patience.
Okay, so that's the trend line on it, yes. There's no liquidity there? The liquidity's down at 60.04?
Oh, here we go. Watch SPX. Right here. The 6270s. SPX at the 200 right now. At 150. Oh, whoa. Let's see if this works. Oh, no.
Why did this shift liquidity? Yeah, 60.04 has 204 buy orders.
More minutes to go. Oh, no. Oh, I should have pulled up the bigger picture. Well, shit. Damn it. Went right to my other support level. Shit. Well, I got 110. Now, I knew I should have waited. Okay. Wish me luck. Should have waited for that slash ES to hit the VWAP right here. He took the trade. 85 cents. Paper trade that, plus what I've already got. $0.75. I got 20 contracts. Oh, God. No.
Yeah, that's a point in.
Kraft Heinz stock jumps after reports of breakup plan. Yeah, this one here is not too hot. Let's get a spike. Come on, give me a nice little bounce here. So I hate, man. Should just sell them right here. Well, too late now. 95 cents and take a small loss. But then I sell it and the thing pops to the 200. That's 62, 89. Okay, get ready to get out of them. I mean, it's not going to be a big winner, but I'm not going to take too much of a risk here. Come on, baby. There's 120. Now. $120. Come on, give me. Okay. Oh boy. That sucked. So it had three white soldiers right there with a tweezer bottom. There's 125. I'm done, though. The AMC looks like it does want to break out. I hate to say it. God darn it, 140. Here it goes. Well. Well. Looks like Jerome Powell might be stepping down. Did somebody post it in the room already? These damn things are. I'm here. I'm just got stuck in SPX and now it's at 145, so 155. Now I'm really mad. I knew that was an opportunity. I should have really loaded up down there at 75 cents. About 50 of them. I knew that was a good spot. I just getting a little tired. Can you hear me? Richard? No, I didn't stop out. I sold it. I bought the dip. Sold it to get out. Now it's at 155. So, not good. 20 times 50 bucks is what? That'd have been $1,000. That trade right there would have been $1,000. $20 contracts at 103. 50%. Then again, off the VWAP with a hammer. 190. Now I'm really sick to my stomach. 230. Oh boy. That sucks. It does. Yeah. The only time I should have had patience and held today was now. 103 to 235. That'd have been a nice paycheck. $133 times 20 equals $2,660 profit out of a $2,000 investment. Okay.
Will see it passed on to the consumer?
Now here comes
Well,
Jabbermouth.
from the standpoint of it's both a question of where there's competition, but also there's the question of where is the least elastic demand. And where we often will see prices passed on to shoppers is often for consumables, where consumers may not necessarily shop around.
Consumers do shop around, honey. I do, in a way. I don't make a major decision until the next day or even a week after. SPX back to $1. Ooh. It's a major depreciation there. There's $1 to 125. 130. $25 on that little bounce. I didn't take it. I just called it. Wasn't fast enough. Could have been. The 62.70 has been my trade of the day. And I did the 50s once. There goes my tea. Buck to 150. AMC broke out from the triangle.
NVIDIA and Microsoft and others in this space has caused like this battle to get to these big round numbers. I think it's significant because expectations are starting to grow. You've got to grow into those valuations, and if they give any indication that maybe sales aren't as robust or that they're going to start to slow down that growth rate, that's going to be a concern because the PE ratios are getting pretty elevated in there right now.
We've got several more weeks for us to talk about it until we actually get some say from them with their earnings. But Tom White, thank you for being with us for Options Corner today. We appreciate it. And coming up, we will talk Bitcoin after we saw some new all-time highs today. We'll break down which levels we should be watching and if we could see more highs in the near term. Market on Close will be right back.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Market on Close. I'm Marley Caden. Bitcoin jumped to another all-time high today, topping $119,000. Joining us now to discuss that move is Phil Strebel, the Chief Market Strategist for Blue Line Futures. Phil, great to have you with us as always. We have to kick things off talking about Bitcoin. We always talk, how high can it go? Well, it went even higher. We've got a new high today. What are your thoughts?
Yeah, we're starting to see a gamma squeeze unfold. It was when Bitcoin got over that 112,000 mark, retesting a double high and breaking out of a bullish pennant formation. We saw quite a bit of short covering unfold. We saw the FOMO, the speculators, start to come into the market and the squeeze higher. You know, Bitcoin has been a great proxy for other key commodities out there, and we're seeing inflation across the board just rise. So as far as an upside price target, I really believe that that $125,000 mark could easily be achieved. And if you look to the end of the year, I think somewhere in the 150,000. There's just been too much widespread adoption of Bitcoin. It's really been harnessed as a key component to many different portfolios. So now you're seeing it just expand the number of uses, the number of people becoming involved with it has really taken its way.
Well, it is so interesting. You know, used to talk about Bitcoin and these strategies that seem so foreign to everyone, and now you're seeing these huge purchases from institutions, and that combined with optimism on the regulatory front. Do you think that these new investors that generally wouldn't have touched something, a speculative investment like crypto and Bitcoin, are really driving these price increases?
Yeah, what I think is happening is that you get the dynamic and the change from something like a traditional, very, very conservative 60-40 portfolio. And with all the political, the geopolitical, things that we've seen over the years, over the last couple of years, the rise in inflation, this is where people start to really get a little bit more constructive on their portfolios. They look at starting to add things like gold, like crude oil, like...
That's why gold, I mean, look what gold did during the Biden years with that high inflation. I guarantee if I had my own stock network, the truth would really come out about how corrupt these people are. I guarantee they're all in shock because this market's up so good. A lot of them. We'll be right back. We got 15 minutes left.
Earlier this year, we saw there was speculation that these tariffs would take place, and they were denied. And then now we have the reality of these tariffs are being implemented. So we might see a reconsideration on things like the silver market, and that's why silver up 5% today.
Woo! 5%.
And much a similar story with the dollar, right? As we're getting some clarity on some of these tariffs, dollar had the worst start to the year in more than half a century, I think, since the 70s. But it's higher today on some of this intensified trade talk.
So the dollar, the interesting thing about that is we've seen a bounce off these lows. In markets, they do bounce from oversold territory. Next week, we're going to have the core CPI forecasting a 0.3% increase versus the previous month. We're also going to see the year-over-year number change. You look at PPI data, that's supposed to come in hotter than expected. And what happens is you get rising inflation, You look across the board at the commodities, how much they've jumped here, significant increase across the board. The Federal Reserve is completely handcuffed. Jerome Powell, I feel bad for him. He can't cut rates when you have rising inflation like this, despite what the administration says for him to do. And that's where the dollar index firms up a bit. That's where yields continue to rise. And that's where we see, these problems take wave with what's going on.
Yeah, certainly a position we're all watching right now as we wait for some of this hard data to come out. We're in a quiet period, waiting for earnings to kick off, waiting for some of that inflation data. As far as we go into next week, and it has a lot for us to keep an eye on, what specifically are you watching for?
Well, when you get into the earnings, I think that the bar it's been raised, it's been brought down kind of low at this cycle around. So I think that many of the companies are easily going to jump over that hurdle because they've reduced it. I think guidance will start to come in and things. We have going to have a little bit of a shake up here with what's going on with the tariffs right now, but that won't be felt for a while. So investors are buying the dip at the moment, especially in tech and the S&P 500. What they're avoiding right now is rate sensitivity. So look at the Russell making new lows, the dollar pushing up, making new highs on the day, and people looking to get their assets into things that will have its purchasing power and accelerate with rising inflation.
Well, Phil, we appreciate you joining us as always. That's Phil Strebel from Blue Line Futures. And coming up, we'll close out our market session. We'll get the big picture from our team at Charles Schwab. Stay with us.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Hey, Dad. I have a question
Gosh,
for you.
I don't want to hear this.
When did Granddad...
When doesn't Grandpa sleep with me anymore? You little pervert. $62.65s. We're at the VWAP on the SPY. 6 more minutes. This girl ain't nothing like Caroline
on
was.
copper. And copper is a key input in pretty much everything we use on a daily basis. What are your thoughts if that tariff does stay as it stands?
Oh, shut up.
Potential cost implications.
Yeah, it's a little bit.
Did they get you from
misdefined.
CNBC?
I haven't heard a real solid explanation for it, but yeah, copper is a key input in the industrial economy. Everything that has an electrical component, including construction, both residential and commercial, along with, again, everything that we track in industrial production, usually has copper as an input. So to raise the costs so significantly without any particular explanation seems counterproductive if your goal is to bring manufacturing back to the U.S. I think the markets are, again, confused as to what is the strategy here, what is the purpose here. But that's not going to help the housing market in particular, anything to do with construction or industrial output. And those are areas of the economy that have been suffering, have been lagging behind.
Certainly. And were there any other tariffs that struck you?
Well, the tariff on Brazil, since it was done for political reasons rather than for economic reasons, a little bit of a surprise as well. And what I think it does is, again, heightens the uncertainty. So we have this whole list of tariffs that were tied to trade deficits and an attempt to close those trade deficits or narrow those trade deficits. And now you have one that's based on politics. And it confuses markets, like where does this end? Where are we going from here?
And as we talk about tariffs, we obviously have to bring the Fed into the conversation. You already mentioned Jay Powell had said that if it wasn't for tariffs, the Fed funds rate might have already been lowered. But with that uncertainty, they've adopted this wait and see approach. As we come into
you're full of crap.
Getting some key data. How
you don't know that.
And influential do you think that's going to be if we see any rate cuts going into the rest of the year?
CPI reading will be really important for the Fed. It's just one of many inflation readings, but it certainly will be important for the markets and for the Fed. I'm looking for a mild overall increase, but the core number could be up a little bit more than anticipated. We've seen, say, in the ISM numbers, an upturn in some of those numbers for the price indices, and that tends to correlate pretty well with CPI. So if that happens, then that again pushes back any hope for a Fed rate cut if we're starting to see the core numbers turn up a bit from here. And again, the economy doesn't seem to be suffering too badly, and the employment market, although pretty stagnant at this stage of the game, isn't deteriorating rapidly. So the Fed really doesn't have a pillar on which to say, oh, we need to cut rates. And in fact, financial conditions keep getting easier, even though, we have all this uncertainty. So Fed holds steady, I think, well into the fall. We still think there's a possibility of a September rate cut, but it remains to be seen.
And how much more data do you think that the Fed is going to need, hard data, or is that rate cut really dependent on us having clarity on this tariff situation?
I think they need hard data on the labor market for sure, to see if there's a significant deterioration in the labor market. The unemployment rate starts to tick up by 2 or 0.3% for several months in a row, then I think the Fed would respond to that. Similarly, if the inflation and inflation expectations numbers come down significantly, I think they would respond to that. So it's not just tariffs, but tariffs, I think, are holding things back because they create upward pressure on prices at a time when, we're seeing some improvement in inflation, but we're not there yet. So as long as we're not there yet, and then we're seeing this upward pressure from tariffs, the Fed is kind of stuck on hold.
Well, we'll find out just how stuck at the end of the month. Kathy, thank you so much for being with us.
Yeah, and do me a favor, honey. Would you get back on here and retract everything you say? Because you sound just like CNBC, and they've been wrong almost 95% of the time. I'm just going to start muting your ass.
Full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Morning movers, be the first to find out what's shaping.
Okay, well, everybody have a good day today? Patience has been a very good key here lately. Every trade I did today was green. Every trade I did yesterday was green. I only had one red trade all week. So, I averaged about, well, today my average was up, but I've been averaging 5 trades, 6 trades a day on average. 7. Today was 8. About 1 hour, one every 2 hours, 1 hour, 1 every 2 hours, and then a couple hour break. At mid-afternoon, I'm taking my time. I'm not being as progressive in the afternoon. I'm waiting for the better setups. This morning, I wish I'd have held them calls on the SPY. I had the bottom on them. I had the SPX. It'd been $4,000 if I held them just on the SPX. So there's another trade where I sat and left $2,800 on it today after getting a nice little pop and getting out. $110-15%. So I'm going to get out of here and just relax and I don't think stocks that much when I get out of here. I like to enjoy my other life that I have, which ain't much. I've had a good life, don't take me wrong. Nothing like Elvis, but I've partied and played in bands and tried to do comedian, tried to be an actor, but I decided that wasn't my way to go. Maybe I should have, but who knows. I competed with Brad Pitt when we were young. He went to Kickapoo, I went to Parkview, and it was about a 2-mile difference. We were always back and forth. He definitely got the girls, though. I got seconds. So, I think that's it. I'd like to see if he'd remember me, but I don't know. Probably not. Who knows? Well, I'm going to get out of here and drink water and relax and meditate and do a walk. And again, thanks all. We'll see you later. Glad to have Funk back in the room. Thank you, Bobby. I'll catch you later. If anybody ever needs any help, just message me. And I'm going to call this, cut this, put this down. I don't know if I already closed down. Yeah. Now YouTube.